Well, feeling good today. Debbie had to take a lap. Great self-awareness. If you're having one of those mornings where things don't seem to be working out or you can't make decisions, just walk away for a second. I love that. Everybody hear me okay? Nice to see you guys back in here. Hey, Zorro. Good to see you. Now, Rob, how could you say no, you can't hear me? That means you heard the question. Thank you, Mr. Flowers. All right, guys. What should we do today? What do you think? How about if we talk about trades that win more than they lose? How about if we talk about learning how to study? How do we talk about, I don't know, creating plans that suit our needs based on our ability to read charts? We're going to do that. We do the same thing every day, guys. There's a reason we do the same thing every day. Repetition really is key to understanding what it is that you're looking at, what it is you're doing. Is anyone else having trouble with my audio? Or is it just Rob? Rob, you had this one the other day too. I'm not sure what's going on. It might be your computer. Maybe your speakers are dying a little bit. Thanks, Malcolm. Um, Thank you, Miss Jen. Guys, we're going to go through and we're going to do really the same thing that we do all the time. First things first is we always check news, making sure that we're not jumping in front of anything. Today's news was enough to knock the NASDAQ loose, but not so much to make it crazy, but it certainly had the potential to. Unemployment claims came out, building permits, Philly Fed. All of these had the potential to move the market. At 9:15, we have industrial production has the potential to move the market. So I check this every morning, and I just want to make sure that I know exactly what's going on and what I should look out for. Um, and I prefer personally to not be in front of news. I don't want to do it. I don't want to jump in front of that emotional roller coaster. Then after I check news, I go to the Nexgen education. Actually, this is the Nexgen website. I updated my bookmark. My brother got mad at me for going to the old education page, guys. Um, but there is an education tab, and there's two things that you can look at here. That your software user guide. There we go. This is your Ninja Trader how-to. This is all the things that you need: connecting, scaling, stops and targets, all the good stuff. And then everything that I talk about comes from the trading guide. It is 100% inclusive, guys. There's nothing missing to get you comfortable and confident with the software. And I like to stress that. I like to say that a lot. I'm going to give you what you need to learn to read your software. I'm going to give you a plan to follow as you learn to read your software. I'm going to give you a spreadsheet so that you can begin the study. I'm going to give you rules. I'm going to give you everything that you need. Good morning, Erla. The only thing that NextGen doesn't provide is experience. I can't give you repetition. So um, I'm going to do everything in my power to get you to where you said that you wanted to be, but it's going to be up to you to get the work done, guys. So understand that there are no secrets, and if you have questions, I want you to ask them. I'm not going to withhold information. But what we're going to do today, what we're going to focus on for the first hour or so of class, will be what we call a high probability trade, guys. And a high probability trade means that each indicator on every chart agrees with the rules for the trade. Triggers are strongest, no termination conditions exist, there's no trouble spots between your entry and your target. This is your foundation, guys. This is laying 4 feet of concrete. So what you have going on, Malcolm, is crude oil rolls on the 15th of every month. And what I do on the 15th, I put a little note at the very top of the classroom. Let me go back to my crude oil. Thank you for putting that in. I meant to talk about that. Um, oh, I thought I already had crude open. Whoops. Let me close my NASDAQ. One of the things that we do in crude oil rolls is there is the potential for just kind of a divided, whatchamacallit, volume. So what it's telling you, Malcolm, is it's saying, hey, check it out. Crude oil rolled. So what I do is I run a market analyzer, and that's right there in the software user guide too, how to do it. And I look at the volume, and it's pretty much split 50-50 at this point. Some people in this room may stay on the June contract. Some people may go to the July contract. There's only about 4,000 contracts difference in the daily volume, but the prices will be different. The fibs will be different, guys. I am on the '07 contract for classroom. So if you pull up and it looks like, oh man, I don't have the same fibs as Mark, there's a good chance you're on a different contract. But this happens every month for crude oil, and this happens every 3 months for like the S&P, the indexes. So great question. You can click OK and roll to 7 if you want. You can just X out of it and stay on 6 if you want and roll when the volume has a more decided split. When it's 50-50, that's pretty much where you're at. It's 50-50. Did that help? Cool. So we're going to talk about this high probability trend trade, guys. And the reason that I do this, the reason that I talk about the high probability trend trade every day, this is your foundation trade. And more than anything, guys, this is a trade that teaches you to read your charts. This is a trade that teaches you to understand what your indicators are thinking or telling you. Most people are going to try to outsmart their own brains, and they're going to try and give everything more credit, more weight, more needs than it has. We're going to focus a lot on simplicity. We're just going to look at our indicators. And guys, within the first month or so, you're going to understand, most people, where the market is likely to continue. When we talk about the high probability trend trade, guys, this likely to continue spot, this is where we're entering. This is where we're getting in at the absolute best of the best spot where the market's most likely to create a bounce and go with the trend. You're going to understand where the market is likely to go eventually. You're going to be able to use these key Fibonacci areas. I had a great picture of it this morning that I dropped in the room. You're going to understand that when there is a key Fibonacci area off in the distance, that may be where everyone's trying to get. This becomes an outstanding spot for you guys to take profits. And then you're also going to understand where the market is likely to stop. And where the market is likely to go is very often where the market is likely to stop as well. This is what we call a termination condition. And a termination condition simply means that you shouldn't trade into that area anymore, that it might create a bounce and it may reverse the market. So your chart reading is going to be about 90% of the day, guys. 90% of every day is going to be sitting on your hands waiting for advantages, waiting for things to come together to take a trade, waiting for these 3 rules for the high probability trend trade to be met. Each rule for the high probability trend trade creates an advantage. Trying to find my pointer's not on here because that's not my slideshow. Each rule is going to give you an advantage, and I want you to begin speaking to yourself in terms of advantages. I don't want you to say, hey, was that a long trade? I want you to say, all right, do I have the advantage of momentum? Do I have a clear path? Is there an entry area? If so, that's my cue to take a trade. And this is what we're doing for the first 30 days, guys, is we're focusing on this absolute best of the best scenario. So there's only 3 rules. These 3 rules, each designed to give an advantage. And these 3 rules are going to happen on only 2 charts. And it's kind of cool the way we can break it down and make it simple for you guys. These 2 charts are designed to give you everything that you need to find a trade. There's a large chart and a small chart. How easy is that? Don't even worry about the numbers on them. There's a small chart and there's a large chart. And the large chart is this broad stroke of a brush, guys. This large chart is slow moving. You're going to use the most current bar on the large chart. And it will literally define direction. Good morning, JW. It'll define momentum. It'll define the areas that may be problematic. Guys, will you give me a Y if you can hear me one more time for Miss Debbie? There we go. Thank you for that. The volume is low. Let me go through and see if I can fix that volume. Thank you for that, JW. We had this the other day too, where my volume wasn't as loud as it could have been. So let me go to sound. Let me go to microphone. And let's turn that up. There we go. How's that? A little better? I hope that's better. Awesome. Cool. So guys, on your most current bar on the large chart, you're welcome. Thank you for telling me that. I need to start checking that. I'm going to leave a little note for myself. First bar, most current, is going to define the direction of the market, guys. You had to turn it down. Sorry, Paul. Nah, I can't please everybody, it turns out. If the background on your large chart is green, the market's going up. And if the market's going up, your highest chance of success comes from looking for high probability trend trades long, buying the market. If the background is red on your large chart, the market is going down, and your highest chance of success comes from looking for those short trades. The large chart is going to define the direction through the color of the background. The large chart is going to define momentum using these T3 trigger lines. That's rule number one, giving you that advantage. And then the large chart is going to define areas, fibs, yellow 1-to-1s, divergence highs and lows. And all of this information, 66% of your rules, happen on the large chart. The large chart leads the way. And we do that because the large chart is really just a representation of the large crowd. What you're looking at is what the people in charge want to have happen. And it's typically easier just to go with the flow, right? I've got 10 million people that want it to go up, and I've got about 100,000 people that want it to go down. Which side do you want to be on in that little rumble in the schoolyard? So large chart leads the way, gives you everything that you need. The small chart is going to be a refinement chart. We're going to dissect that most current bar and put it on a much smaller chart. You're going to see about 15 to 30 bars on this chart, and they're going to be happening within this large chart. And the small chart is a refinement. It's going to pinpoint your area for entry. That's what it is. It's an entry chart. It's going to give you the best of the best spot to enter the market with unreal precision. And the small chart is nothing more than a reflection of the small crowd, those people that fight everything. And they usually have just enough in them to give us a fight right back to the perfect entry. So we're going to keep it pretty simple this morning. We're going to talk about 3 rules. We're going to focus on really 3 rules, 3 advantages, 2 charts, and we're going to embrace simplicity like we're getting paid to do it. So for you guys that are new, let's talk about the path to becoming a confident trader ASAP. For you guys that need a little help, that maybe you're not where you want to be with your trading yet, this applies to you as well. Post your trades in class. Everything that you do, post trades in class. Everything that you see, post it in class. Everything that you wonder, post it in class. But here's the deal. Tell me why. What do you see? If it's a question about an area, circle the area and say, Mark, what's up with this blue line? If it's a trade that you took, make sure that you show me both the large chart and the small chart. And don't just show me your trade and say, hey, look how awesome I am. Say, Mark, this is what I did, and this is what I saw, and this is where I got in, and this is where I got out, and this is why I did it. And guys, your annotations on your charts, what they're going to do for you is they're going to give you the ability to come back and study. Every day you're going to come back and look at what you did yesterday to see what you can do better today. And that's where the second part of your path to getting to where you want to be at ASAP is. And it's using the spreadsheet that Nexgen provides you. It's in your Nexgen Study Picks folder. I like to drop mine in the room because every day you brilliant people force me to put great pictures in mine. So mine gets updated every day. Yours should get updated every day. But the most important tab on there for new users is your trade journal, tab number 1. This is where every time you take a trade, you're going to drop it in here and you're going to talk about what you saw and what you did and why you did it. And you're going to come back and study it. And that's why annotation is so key. That's why understanding your chart read is so key. And that's why dropping it in the room and asking for feedback, making sure that your reads are correct, is the key to getting to where you want to be. When you create this trade journal, you're going to come back every morning and you're going to look at what you did yesterday. Maybe yesterday you fought things. Maybe yesterday you traded beautifully. Maybe yesterday you were frustrated because you found yourself breaking rules. If you look at that in the morning, you're going to give yourself the right mindset to set up for success the next day. Ask yourself the simple questions. What worked and what didn't work, right? Let's repeat what works and let's avoid what's not working for us. And you'll find a very distinct correlation between what feels easy and keeps you relaxed with following rules, with having advantages. and it's going to feel forced. You're going to get sweaty palms and butterflies in your stomach when you find yourself breaking rules. So do this study every day. That's on your spreadsheet. That's the first tab. The spreadsheet's also set up to help you learn the rules for the high probability trend trade. I've created a tab for you with each rule broken down and then the opposite of each rule. So strong triggers versus weak triggers and clear path versus termination. And guys, this visual representation helps you learn these looks. The third tab is where you're going to build your trading plan. When everything is perfect, when you're taking that trade that offers a statistical advantage that has been proven to win more than it loses, drop it in here. You're creating a plan. And then finally, the last tab is where I steal all of your brilliance. If you drop something in the room that's just outstanding, I like to take it from you. I like to make it available for people to study. There's high probability trend trade entries going up and down. There's a management scenario. There's a whole section dedicated to patterns that repeat themselves in the market. I'm going to tell you right now, guys, all we do is we trade patterns. It's the same darn thing every day. You just got to get good at it. Termination conditions, and then you adrenaline junkies that want to trade the NASDAQ, I've blown out a lot of accounts to put together that information for you. So make sure that you're posting, guys. Make sure that you're using that spreadsheet. I tell people, if you take 15 pictures a day, 15 well annotated pictures a day, guys, that's 300 pictures a month. That is 900 over the course of 90 days. You're sitting in the thousands. You are going to get to where you want to be a lot faster. So we're going to learn the trigger line and Fibonacci rules for when it's okay to trade. You guys are going to simulate, you're going to practice, you're going to post. We're going to simplify. I'm going to give you 2 trades, solid rules, optimize your chances of success. It's not that it's a bigger gamble, Morgan. Let me see something. This is crude oil. All right, little VW bug, convertible, cruising down the road, flat 4, feeling good. This is the NASDAQ. And it's not that it's better, it's not that it's worse, it's not that it's more of a gamble. It is so much faster than crude oil. It is so much faster than the S&P. And there's a couple little nuances that go with it. So I always encourage people, I'm like, learn it easy, right? Get a market that's easy to follow. Get a market that's easy to see your patterns on, to go back to study. And eventually you'll get to the NASDAQ. But most people that can't make their rules-based decisions within 3 to 4 seconds have no business being on the NASDAQ, because you have to be instant. It is so fast. It's actually so fast, Morgan, that the large chart for the NASDAQ and the workspaces we provide is 3 times larger than the large chart for crude oil or S&P. And the entry chart for NASDAQ is actually your large chart for the crude oil or S&P. It moves that fast that it has to be slowed down. So everybody's going to get there. I think NASDAQ is outstanding for momentum traders. If you start really loving that momentum, NASDAQ's pretty cool for that. And guys, we're going to simplify. You have to learn the looks so that they become easy. And I can't stress that enough. You have to learn the looks so that they become easy. What's the easiest way to do that? Seeing the looks, guys. Taking pictures of the market when the market isn't moving. Taking pictures of rules being met when there is absolutely no fear of losing a trade. And if you go back and you study the individual pieces, what happens is you recognize them in a moment's notice, and you don't hesitate taking these trades. So let's get to work, guys. Let's talk about 2 charts. Let's focus on 3 rules, 3 simple rules designed to give us advantages. Where on earth is my cursor? There it is. 2 charts, 3 rules, 3 advantages, 1 trade, guys. Rule number 1 says, large chart must have strong trigger lines. Strong trigger lines give us the advantage of momentum. So in order to have strong trigger lines, remember the background lets us know if we're going up or down, green or red. When my background is green, when the market's moving up, both of my trigger lines should be green as well. The small triggers are these solid lines, and the large triggers are the dashed lines. Um, it's when there is separation between the small and the large. Good morning, Miss Cindy. When the small break above and away from the large, guys, this is what we call strong triggers. And when I have strong triggers, the odds are favorable for the market to continue up. And when the odds are favorable for the market to continue up, this is when you guys, good morning, Elgo, are going to be able to buy Fibonacci support, the best of the best time to buy Fibonacci support on that smaller, faster chart. On the large chart, it looks like a tail or a wick. You'll be able to circle these tails to use for a study process. I'm going to show you how to do that in a little while. But understand that momentum is your best of the best advantage when looking for a trade, and small's below the large, large or wide. The colors between the triggers and the background must match in order for you to have odds favorable momentum. When I have those strong triggers, when the separation is there, this is the best of the best time to sell Fibonacci resistance on a smaller, faster chart. Once again, it looks like a tail on the large chart. You guys will be able to pinpoint with insane accuracy where that tail is most likely to form, and this becomes your entry for the highest probability trend trade. Well, anything that's strong once probably weakens, right? So when the small triggers come down and work their way inside of the large triggers, the large triggers gobble them up. Both triggers get into the middle of them. This is what we call a weakening of the large triggers. It's a visual representation of the loss of momentum. When this happens, rather than having odds favorable momentum, we just find ourselves in an anything can happen scenario. And you're going to see it in the classroom a lot on people's charts annotated. You're going to see odds favorable momentum, OFM, and you're also going to see ACH, anything can happen. And it's pretty easy to recognize with just a little bit of study, guys. I have anything can happen triggers, and the market ends up reversing even without the benefit of Fibonacci. Odds favorable momentum, there's one of those tails where you guys can pinpoint an entry, ride that wave of momentum. Triggers go back to anything can happen. We see another reversal, and then that produces odds favorable momentum. And we're back in the market, but this time we're making money to the downside. You guys are pinpointing exactly where these tails are likely to form. And then we get into what's kind of a transition phase, guys. And this is the only reason that I discuss the trigger lines matching not only one another, but also the background. Because you'll see that with the large down and the small up, or the small up and the large down, or the green background and the red triggers, guys, this is where the market is consolidating. This is where the buyers and sellers are fighting. This is where your rules keep you safe. This is where you don't have to form an opinion. You don't have to try to predict what the market's going to do. And this is kind of that 90%. 90% of your day is spent sitting on your hands waiting for advantages. Eventually, somebody's going to win this fight, guys. Somebody always wins the fight. They're going to give you that odds favorable momentum. You'll be able to look for your rules being met again. So, odds favorable momentum, I say it all the time. This is the one advantage I don't want to do without. This is the advantage that tells me the market's likely to continue in the direction of the trend. Odds favorable momentum creates the potential to break through those key areas, those problematic areas, and odds favorable momentum will even cover up some of the mistakes that new users make. But odds favorable momentum doesn't last forever, and you can see the decline. Best of the best, strong triggers, sell resistance, go, 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 rules met. When one of the lines goes inside, guys, you can see it. You can say to yourself, man, my momentum is slowing. I'm losing that advantage of momentum. Let me use my chart reading to make sure everything's right before I enter a short. And then when we get those anything can happen triggers, you can say to yourself, I've lost the advantage. The advantage is no longer present. Any trade I take is no longer high probability. And these weak triggers, these anything can happen triggers, when they reach an area, holy smokes, that area is more likely to stop the market. So that's kind of our segue to rule number 2. But let's go back to a live market. Let me go to, where's my large chart for crude? Here we go. And let's just take a look. Odds favorable momentum. There's some of those tails, guys. And that market's rocketing up. Odds favorable momentum. There's a little tail. Takes us right down to Fibonacci support. Odds favorable momentum. A couple tails before a little bit of a bounce. Odds favorable. More tails. Holy smokes. Odds favorable. The market just continues up. Guys, this happens every day. Your job as a brand new user, if you really want to make sure that you're not missing out on this. If you want to make sure that you never miss odds favorable momentum, you've got to start snapping pictures. You've got to start using arrows and using this call out button and saying, hey, these are strong triggers. Why are they strong triggers? Because they are wide, open, the smalls are above the large. This is rule 1 met. This is momentum, guys. And if you do this and you start pointing these arrows, what happens is you come back tomorrow and you say, you know what? I know I'm looking for rule number 1. I know that I'm looking for momentum. This is it. And then maybe you change colors and you say, these are weak. These are weak triggers. Why are they weak triggers? Because the smalls are inside of the large. Anything can happen. Rule 1 not met. And you can just see this and go, man, I don't want to do that. And guys, what happens with those weak triggers? Boom, look at that retracement. And it also happens to happen right at a key Fibonacci area. And I'm going to give you the recipe right now for how you can understand if this area is likely to hold or break. But first, I'm going to take my strong triggers picture and I'm going to go to my spreadsheet. And guys, I'm going to keep building it. I'm going to keep building this spreadsheet. The more work you put into this, the easier it's going to be for you. Don't rely on my work. Don't rely on my annotations and my pictures to get you where you want to be. You got to put that work in. So once I have strong triggers, is everybody cool with that? Let's ask real quick. Smalls above the large, smalls below the large. Guys, this is your first advantage. This is the advantage of momentum. This is the best of the best. Can you guys hear me? Don't be afraid to participate. It doesn't have to be a lecture. Nobody can hear me? Do I need to reboot? You can hear me. Okay, cool. Everybody's got this one then. I love that. So let's go to rule number 2. Rule number 2 is termination conditions must be false. You can't trade into those likely to stop areas and expect to have an advantage. But when they are false, good morning, Kenan. We're going to have a clear path. We're going to have room to our profit targets. So termination conditions, what are they? I want to do this. I want to show it right from the trading guide, right from the rules, if you will. Termination conditions are Fibonacci-based indicators that may reverse the market. Guys, May is a different color. May is underlined because there are no guarantees. What we're doing is we're trading patterns that have been proven to repeat themselves over and over. Some of them allow us to see our rules met, and some of them just keep us out of trouble. So areas that may reverse the market based on a comparison of the Fibonacci area and the T3 trigger strength and location, which means that these lines on a large chart, divergence highs, divergence lows, yellow 1-to-1s, red resistance, blue support, we're going to use the trigger lines, and they're going to let us know if they're likely to stop the market. They're going to let us know if they have the potential to break, and they're going to let us know if the areas are broken and we don't have to worry about them anymore. And we're going to do that with a pretty simple little comparison, guys. We are going to allow price to reach the area. So in this case, price reaches Fibonacci support. When it reaches Fibonacci support, decisions are probably going to be made by the people that control the market. Fibonacci support is reached, and all you have to do as a brand new user is ask yourself, where are my trigger lines? And if your trigger lines remain above support, support has the potential to hold. It may stop the market. It may create an untradeable bounce. And that's a termination condition. And it really is that simple. If price reaches support and the triggers remain above, that area has the potential to stop the market. And if price reaches resistance and the triggers remain below, that area has the potential to stop the market. Don't take any more long or short trades. Just wait and see what the reaction is. Sometimes they break. They have to break every now and then or we'll be caught in a range for the rest of our lives. Sometimes they create big untradeable bounces. Sometimes they completely reverse the market. And when a termination condition reverses the market, we're going to call that a strong top or a strong bottom, and that's a precursor for the highest probability trend trade that you can take. So price reaches, no triggers break, absolutely no trades in. And then guys, we're using the trigger lines to determine whether or not it's a termination condition. So the opposite of no clear path is going to be a clear path. When my small triggers and my large triggers, both lines of both, get past the area is considered broken, and that path is going to remain clear until you hit the next area. So up here, price hit support, the triggers were above. I sat on my hands. I said, you know what, Mark? I don't know what the reaction's going to be. When the small and the large cleared it, I said, man, I got room to the next target. I also have odds favorable momentum. Let me pinpoint right where the market is most likely to continue and take a short trade with that momentum and a clear path. Rules 1 and 2 are met. I'm going to giddy up. So termination conditions aren't tough, guys. Don't make them out to be anymore. Every line on your large chart has the potential to stop the market. Use your trigger lines to know whether or not it will. Don't rank them in importance. Don't give one more strength than another, guys. If price reaches a line, resistance, triggers remain below, the area is not broken, the path isn't clear, and rule number 2 isn't met. If the small and the large clear the area of resistance, now it's broken. It has nothing to do with price bars. It has nothing to do with the color of the fib. It has everything to do with your small and your large triggers on the other side of the problem. Now the area is broken. We're going to look for that clear path, for that momentum, maybe pinpoint a tail and take a long trade. For the brand new user, these are your scenarios. It's either broken or it's not. Let it be simple while you learn to read your indicators. But your chart reading is going to take you next level, guys. You are going to understand when areas have the potential to break. And it's all going to be reliant on odds favorable momentum. So when I have the strongest trigger look ever, and my small triggers absolutely smash through an area, but my large triggers lag behind, the path isn't clear yet, that area has the potential to break. But until the large clear, it's not a clear path, which means that rule number 2 isn't met, which means that you're not looking at a high probability trend trade. This look, 50% of my triggers through, 50% are not. We're going to call this a 50-50 trade. I'm going to give you a solid plan to take that 50-50 trade. But it's going to rely on momentum. It's going to rely on the perfect entry. So let's go through to the large chart again. I love looking at the live market, guys. Let's get lessons because really this is the easiest way to do it. Whoops. Maybe. Hold on. I got some happy fingers this morning. Oh no, I closed out my large chart. So guys, I'm going to show you a trick because I just made a mistake. It happens sometimes. If you accidentally close out one chart on your workspace, watch this. I'm going to close crude oil. And when it asks me to save, I'm going to say no, 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 because I messed up. I lost a chart. And I'm going to click no. And then what I'm going to be able to do is when I reopen crude oil, it's going to give me that large chart back. So we'll come back to it in just a second. We'll go on to the next slide. And then while that populates, we'll come through. Guys, this is your reminder that 90% of your day is spent reading indicators. 90% of your day is spent just looking for advantages, the best of the best. 10% of your day is going to be capitalizing on it. So let's use some arrows and all that good stuff. The market is screaming to the downside. Momentum smashes through support, and we hit these yellow 1-to-1s. And when we do, everyone in this room says, you know what, Mark, no more short trades. Some of you said, I'm taking profits there. And what happens is this keeps every one of you out of a loser. You don't have to take that short trade. The path isn't clear. Guys, these termination conditions are something else. So there's no short trades. And then price pushes all the way back up from that key area into resistance, another key area. And the triggers remain below, which means that I don't have a clear path either way. And I can't go short into the terms, and I can't go long into the terms, and I don't have momentum because my triggers don't match. And man, what on earth am I supposed to do other than nothing? And then price comes all the way up to this mid-band, and I want you to see this neat little thing. Those large triggers are a full bar away. And guys, if you go to termination conditions, the large chart mid-band behaves as a termination condition if the large triggers are a full bar away. So I can't go long and I can't go short against all that momentum. And guys, this is your 90%. This is where you do absolutely nothing because your rules aren't met. This is where anxious people destroy accounts because they get tired of waiting, because they try to predict, because they try to want to make something happen. If you can train your brain starting on day one to do absolutely nothing when the rules are met, you're going to create this huge advantage for yourself, because eventually this 90% ends. All the triggers clear resistance and the path is clear, and the smalls get outside of the large, and this mid-band does not behave as a termination condition because the large triggers aren't a full bar away. And then each and every one of you is going to have it in you to pinpoint exactly where that tail is most likely to form. And this is the trade that you're going to ride that momentum up to resistance. And instead of losing $1,000 on opinions, you're going to grab hold of that 450. You're going to smile big, maybe go get an ice cream or something. So patience, guys. Patience is key. Waiting for that clear path, coupling it with momentum. That is how we get to where we want to be. So let's open up the large chart real quick. Weak triggers at resistance. It didn't stop it completely, but look at the bounce. It would have taken you out. There it is at support. And even with odds favorable momentum, it stopped that market cold. So once again, let's build up our spreadsheet and let's draw an arrow. And let's write the language, guys. Price reached support. Triggers remained above. This is a term. No clear path. And then write it out. Rule 2 not met. Is everybody comfortable? It's really pretty simple. If price reaches the area and the triggers remain above support, don't do it. If price reaches resistance and the triggers can't break it, don't do it. When's the area broken? When all the triggers get above and we find ourselves with one of those clear paths. So let's do this one. Large and small. Clear the areas. Have not reached the next area. Area broken. Clear path. Rule 2 met. So now we did it again, guys. We took a picture. And I'm going to go throw it in the spreadsheet. We're going to put this one in the clear path one because I'm kind of loaded up on terms. We'll call it nothing in the way, right? Call it whatever you want. This is your spreadsheet. So everybody's good with that, right? We feel good about termination conditions. If price reaches an area, areas on the large chart define problems. Areas on the large chart let me know where the people in charge may be reacting. Scroll back, guys. Build some faith in these. Recognize just how often these lines stop a market cold. And I'm going to tell you right now, if you scroll back 10 days worth of information, you will probably never trade into a termination condition. Look at that. There's 1, 2 creates a bounce. Divergence high creates a bounce. Divergence low, triggers don't break. Guys, here's rule number 2. Termination to weak triggers, the termination to termination to termination. 2, 3 divergences in the same location, termination. This is what we call consolidation. This is where traders love to get beat up. We're not going to do that, guys. We're going to follow our rules. We're going to keep it very simple. We're going to respect the idea that these areas can stop markets. Large chart lines create problems or advantages if they reverse the market, but sometimes that large chart, that slow moving chart, we can't see when change is happening. It's slow, guys. It's a freight train. It's doing 45 miles an hour down the track, and it is fully loaded. So there's one more termination condition that we're going to talk about. We're going to, I sure will, Jonathan. Let me get through what I'm doing, and we'll turn that into a second-hour lesson if that's okay. There's one more termination condition, guys. 3 divergences in the same price range. You'll see it on every time frame. You'll see it on a range chart. You'll see it on a minute chart. You'll see it on a month chart. But you're going to see it on your small chart, your entry chart first. So 3 divergences. Divergence is a loss of momentum. For you new users, let's talk about what divergence is real quick. And let's not give it any more power than it deserves. Divergence simply means that price came down and then it went up. There's your pivot. Or price goes up and then it comes down. This little V is what we call a pivot. It's just a reversal in price. If at the time of that pivot, or actually about 3 bars after that pivot, if for some reason momentum will be pink, doesn't follow price, if momentum lags behind price, your software is going to do these amazing calculations and it's going to print a negative number that has absolutely no bearing on anything. It's just a byproduct of the calculations. But this cyan line is going to print to the right. This calculation isn't complete until about the 3rd bar up. So price isn't reaching this line. Price is actually creating this line. If I get 3 divergences, 3 losses of momentum in the same price range, it may terminate the trend. It's true at lows, it's true at highs, and those 3 losses of momentum just tell me I don't have a clear path anymore. This is the only time that I will let a small chart tell me that I don't have a clear path. 3 divergences with weak triggers makes it even stronger. You guys remember the lesson. Smalls outside of the large, odds favorable momentum. Smalls inside the large, anything can happen. Guys, that's true on every chart too. And then when that 3rd pivot's higher than the previous or lower than the previous from a high, it creates a head and shoulders and it adds even more fuel to the fire. You're going to see this on all time frames, but you're going to recognize it first on the small chart. And what it's going to do is it's going to tell you no more short trades. It's going to tell you no more long trades. The tides, they are a-shifting. So, guys, that's termination conditions. We have talked about momentum. We're embracing it. We love it. Momentum is outstanding. Momentum lets us know that the market is likely to push in the direction of the trend. We identified momentum on the large chart. Smalls above the large are wide. They're angled in the direction of the trend. We've identified our problem areas. Resistance is in the distance. It's not even a factor. If anything, it's a target. And then the previous resistance is in the rearview mirror because all the triggers are above, guys. This large chart is what it looks like when it's time to go to your small chart, when it's time to look for an entry on a smaller, faster chart. And remember that the small chart is the small crowd. These guys fight what the big crowd says. These guys say, hey, big crowd, I know everything's going up. I know the momentum's there. Your path is clear. Why don't we just sell a few and see if we can't change the direction? We love the small crowd because they're going to push you right back to your absolute best of the best entry. And that happens, we're going to use a limit order. And we're going to buy or sell that pullback, that little shove. And we're going to do it at an area. Areas on the large chart could be problematic. Areas on the large chart give the market a place to bounce, to continue with the trend. But the thing is that we want those areas to be inside of triggers, guys. And for you brand new users, we want them to be inside of favorable large triggers. And favorable large triggers means that your large triggers on the small chart, the same ones that give you that separation to create momentum, and your synthetic triggers, these step triggers, which are nothing more than the large triggers from the large chart transposed over onto the small. When these two are one on top of the other, when they're riding piggyback, when they are so tight on one another, that's the least amount of space for areas to be within. So the trigger lines are moving averages. I'm going to go a little mathy on you here. The trigger lines are moving averages, guys, and price loves to return to moving averages. This is what I refer to as the correction point. The trigger lines are the correction point. The areas within that correction point are where I anticipate a bounce. So if my correction point is tight, there's less room for areas. If my correction point begins to split or break apart, I have essentially doubled the areas where the market may pull back to. I've decreased my accuracy, guys. I've increased my risk. So for brand new users, I encourage you guys, focus on favorable large triggers initially. You'll figure out when it's okay for them to be apart as you become more of a chart reader. But rule number 3 is designed to get you into the market where it's most likely to continue. We talked about those tails on the large chart. Guys, we don't trade the tails. We trade pullbacks to areas inside of favorable large triggers. The top of the bar in the live market is going to be the beginning of your pullback. The bottom of that one bar, that tail, is going to be that pullback to support inside of favorable large triggers if it's a rules met trade. So once the rules are met on the large chart, we're going to ditch it. We're going to go to the small chart and we're going to wait for a reversal bar, just a down bar on the small chart that says, hey, the small crowd's fighting. When I get my down bar, first thing I want to do is I want to find those trigger lines. I want to find my correction point. And I want to say, man, are they one on top of the other? Are they wide? Are they angled in the direction of the trend? If they are, well, they're favorable. So I'm going to refine that big box to a smaller box. I'm going to find the areas that fall within. Guys, we're using fibs, mid-bands, and yellow 1-to-1s. If they are inside of the triggers, your highest point of support to your lowest point of support creates what we're going to call a window of opportunity. This is the best of the best. This is the area where the market is most likely to continue. This is where you're going to define your entry for the highest probability trend trade that you can take, and your job is to activate a limit order right at the top of that window at the highest point of support, because remember that your large chart is screaming to the upside with nothing to bang its head on. We're not expecting it to get lower, but we are prepared if it decides to go lower. For a short trade, it's exactly the same, guys. Reversal bar begins the process. Whoops. Once that reversal bar prints, I'm going to identify my triggers. Once I see my triggers, I got to find the areas within, and I'm going to drop a limit order just below that lowest point of resistance inside of favorable large triggers. If you spend 30 days, kid you not, 30 days, focusing on the entry for the high probability trend trade, first and foremost, understanding that the large chart has momentum, that the large chart hasn't reached any areas, and bonus points for you if the large chart is coming from a termination condition that reversed the market. Once this happens, you're just going to turn your attention to the smaller, faster chart. It's time to look for an entry, so you're going to wait for a reversal bar. And at the time of the reversal bar, you're going to identify your triggers. You're going to say, where are those large triggers? Where are those synthetic triggers? But you know that that's not where the trade comes from. The trade doesn't come from the reversal bar. The trade doesn't come from the triggers. The trade is going to come from the areas inside of favorable large triggers, from the lowest point of support to the highest point of support. And once you identify this window of opportunity with a little bit of study, some practice, and maybe some feedback, you're going to have the courage to activate a limit order right at the top of that order, that window. And that limit order is all you can do. You can't make the small crowd push back. You can't make it come to your entry order. You can't do anything other than make sure that your rules are met. But if it does come back to that, you're in a long trade. And you're not just in a long trade. You're in a long trade with the advantage of momentum. You're in a long trade with a clear path. You're in a long trade having entered where the market is most likely to continue. You're in a trade that typically wins 70 to 80% of the time. You're in a trade that creates an enormous amount of confidence through the memory of success. And you're in a trade, Andy, man, that's a cute puppy. You're in a trade that creates confidence, guys. You're in a trade that teaches you to read your indicators. And because you know where the market is likely to continue, my dog's behind me going nuts with a toy. So we get squeaky toys to go with Andy's picture. Once you understand where the market is likely to continue, once you trust this entry, once you can identify that window of opportunity, you also understand where the market shouldn't go. It shouldn't go beyond those areas. It shouldn't go beyond those triggers. If it does, you've lost your edge. Rule number 3 is out the window, guys. We will place protective stops beyond that window of opportunity, beyond those trigger lines, about 4 to 5 ticks. And if the market decides to rifle through our entry, rifle through our window, and hit that stop, we're going to be okay with it. Because anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time, guys. Losses are a normal part of trading. Losses are a normal part of a positive equity curve. Losses are a cost of doing business. But we can minimize our losses dramatically with a proven methodology. And the great thing is, with all those advantages, you're more often than not going to get a reversal bar in the direction of the trend. And when you do, you can reduce risk even further, 2 ticks below, 2 ticks above. And it's not uncommon to see you guys pulling these sniper-like entries. And even if they fail, even if it's one of those costs of doing business, only giving up 30, 40, $50 instead of 150, 200, right? Because we're not wishing and wanting the market to reverse down here. We know exactly where it's most likely to continue. So, guys, that's my first hour every hour. My first hour every hour is high probability trend trades. My first hour every hour is advantages. My first hour every day is 2 charts, 3 rules, and reminding you to post your pictures in class, to ask for feedback, to fill up that spreadsheet. And this is the part where I give you guys a bunch of gifts. The first thing I'm going to give you is the most ignored document ever submitted to this chat room. Guys, this is your chart reading 101. This is, I don't even know how to say it so that you guys will believe me. If you want to be a chart reader, if you want to get to where you're going fast, if you want to be able to look at your indicators and understand whether or not the rules are met, do this exercise, guys. It's about 5 hours of your life. Take 25 pictures of strong triggers, weak triggers, clear path, termination, 50-50, and get 20 pictures of entries, high probability trend trade entries, windows of opportunities. Right? The same way we did it together. But don't just take pictures and ignore them, guys. Write the whys. The same way we did it together in this room. Where did it go? Where did it go? Price reached support. Triggers remained above. This is a termination condition. This is not a clear path. Rule number 2 isn't met. These are strong triggers because they're wide open. The smalls are above the large. Rule number 1's met. Momentum. If you go through the process of writing why, what are the advantages? Describe it. What's it take for it to be true? Guys, what happens is you're committing looks to words, and words are powerful. And when you start believing that strong triggers is an advantage that you don't want to live without, that strong triggers is a way for you to have just this awesome strength behind your trades, then you start committing to it. You start believing it. And if you do this for each individual picture, guys, by the end of this exercise, you're going to be a badass. By the end of this exercise, you'll never ask me if we reach the termination condition. Hell, you'll be teaching the class. Because you're going to piece these individual parts, guys. You're going to take these looks to create a trade. You're going to take your strong triggers. Let's see what it looks like. You're going to take your strong triggers, and you're going to couple it with a clear path, right? And then once you have that, all you have to do is move over and find the window of opportunity up. And that's it. That's exactly what we're doing, guys. 3 little rules, 2 charts, but you've got to commit them to memory so they become easy. So I'm going to encourage you to do this exercise. I can't make you though, but if you really want to be a chart reader, this is the guaranteed fastest way. And then from there, I'm also going to give you a plan. I promised you a plan. Here it is. This is the KISS plan, ladies and gentlemen. This is a stepping stone in your learning journey. This KISS plan is designed to optimize the chances of success with the high probability trend trade. It's designed to optimize the chances of success with the 50-50 trade. But through simulation, study, class feedback, and continuous practice, you will be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. Guys, that's an AI-generated phrase that says, you know what? When you can read your charts, you're going to see stuff, and you're going to figure out what works for you. Never fight the large chart. That's your simple plan, guys. Don't fight the direction. Don't fight the momentum. Don't fight the areas. Go with the flow. Make it easy. Keep it simple. Define your entry. Make it your entry. Don't let it be my entry. My entries won't make you money. They're on my charts. But your entries have the potential to get you into the market where it's most likely to continue. I have never had anybody in the history of this checklist do worse than 70% winners. Never in the history of this checklist has anyone done worse than 70%. I've had engineers back test this thing over like 2 years, and they end up in the upper 80s. I like to tell you guys 70 to 80s. So take this one. I dropped it in the room. Print it out. Put it on your desktop. Police yourself. Write these rules on your chart. Commit them to memory. Once you define your entry, guys, you've got to manage it. But before we do that, let me show you this one too. This got dropped in the room. This is a termination. That's where it reverses the market. That makes it a strong bottom. This is odds favorable momentum, up and down. Those are weak triggers. So you can police yourself as you go take those pictures. You can check yourself, make sure they're accurate. It's your cliff notes, guys. That's a termination. That has the potential to break, and that's broken. Clear path. Window down, window up. Guys, look at this every morning as you're learning the software. Make it easy. And then what you're going to do is once you define where the market is most likely to continue, it's time to manage it. And management takes chart reading, guys. Management takes an ability to read those indicators. And that's what we're developing through entries, is the ability to read the indicators, the ability to be comfortable, to lose that nervous feeling. So the same way your entries are crazy mechanical in the beginning, right? It's nothing but if then. It's very pragmatic. Your management can be exactly the same. Super conservative, super if then, not shooting for home runs. And then, of course, you will craft a plan tailored to your personal goals based on your experience reading the indicators through simulation, through study, through class feedback. Guys, I love working with you on your management plans because management is just recognition of advantages. But in the beginning, you have to know where the market is most likely to continue so that you know where your initial stop goes. It goes 4 to 5 ticks beyond that window of opportunity. And at this point, you're either going to get stopped out and you're going to smile about it because of all the advantages that you had, or it's going to give you a reversal bar. And if it gives you a reversal bar, guys, you're going to reduce your risk. You're going to go 2 ticks above it. And you still might get stopped out. Not going to lie to you, but you might get stopped out for a much smaller loss. A lot more money left in the bank. But with every advantage you have going on, hitting that first target doesn't tend to be too difficult. And guys, your first target for the brand new user is $100 in the distance. Just $100. That's all. Can you guys see my screen? Okay, you can. I had something blinking. It was freaking me out. $100 in the distance, guys. Most of you don't think that $100 is a big deal. Most of you, $100 is like, whatever, right? Can't even take my girl out to dinner with $100. Guys, $100 that's a flash in time. That's a moment. What if you had like $300 moments every day? That's $72,000 a year. What if you had $500 moments every day? That's $126,000 a year. Guys, embrace the idea of getting paid and get paid quickly. Get it in the bank and then protect it. Now I'm break even. I've got $100 in the bank and there is nothing left for me to do to either get stopped out, break even, or let it hit my second target. And guys, if it hits my second target, that's a $300 trade and I'm exiting the trade and I don't care what happens next. Because a $300 trade 2 to 3 times a day on a 4 or 5 lot, guys, you're killing it. You're killing it. So keep it simple, keep it basic, keep it very mechanical in the beginning. Keep it focused on advantages and learn to speak to yourself in terms of advantages. If you do that, your chance of success goes up exponentially. If you post in the room, it's going to go up even greater. If you study your spreadsheet, it's going to go up even more. If you practice the correct trades instead of just trying to get lucky, you're going to get to where you want to be faster. And if you keep it simple, don't give yourself too much to think about, you'll be amazed at how quickly you arrive where you want to be. And I think almost anybody in this room that has been trading for over a year will tell you that they tried to complicate it. They'll tell you that it didn't serve them. And they'll tell you that when they went back to simplicity, they started getting the results that they wish they had gotten when they started. I hear it every day. So are there any questions about the high probability trend trade? Guys, I've dropped all of these Word docs in there for you. You have them. Is there anyone that feels like going short into support with absolutely no trigger lines is a good idea? Nope. Good. I'm going to save this picture because we're going to have a lesson on the gap theory, guys. Not only is this a termination condition, this is a prime example of what we call the gap theory. Remember when I said that the mid band behaves as a termination condition? if the large triggers are a full bar away? Well, it's not just the mid-band. I mean, price reached support, the triggers didn't break. This is a termination condition on its own. But this gap theory says that if the large triggers are a full bar away when price accelerates and hits an area, price is likely to close the gap back to the large triggers. How do I know the large triggers are a full bar away? That bar right there. This is what we call a reversal bar marker. And a reversal bar marker is nothing more than a little visual, where is it at, of where this bar becomes a down bar, a permanent printed cast in stone down bar. So when anytime price reaches an area, fibs, mid bands, one-to-ones, I don't care, and the large triggers are a full bar away. Jonathan, you were asking about the implications. Here's the implications for the brand new user. Any shorts taken between the bottom of the bar and the large triggers are more likely, not guaranteed, to get run over as it closes the gap. That's the only implications for the brand new user. No more shorts. And any shorts that you take between here and here are more likely to get run over. They're more likely to not work. And what does that mean? That means that our advantage is gone. Is it guaranteed to happen? Absolutely not. Is it destined? Absolutely not. I'll tell you what though, when this little pivot doesn't happen at a fib, it's more likely to happen. So we keep our eyes on this gap theory. And it doesn't mean go long. It just means no more shorts. So Jonathan, I hope that was helpful. If this were just a mid-band and not a fib, that look would let me know that the mid-band is behaving as a termination condition. Price reach resistance. Look at that. There's your mid-band. This is probably your picture, Jonathan. There's your support, and it closes the gap. And it comes back to resistance, and all the triggers are below, and sure enough, reverses the market, and it's pushing down. Rule number 2, guys, it forced you to be patient in the S&P. So I'm going to take 5 minutes. As much as I love talking nonstop, I'm going to take 5 minutes, guys. I'm going to stretch my legs. I'm going to go breathe for a second. I always encourage you guys, take a break. Get up from your computer. Walk around for a minute. I'll be back in about 5 minutes. When I come back, we're going to start looking at all the charts that were posted. I'm not going to say you're great or you suck. What I am going to say is let's look for advantages. Let's talk about every chart in terms of momentum, clear paths, and entry areas. And what you're going to see is that there's a lot of people using their chart reads to find trades outside of that highest probability trend trade. So use it for inspiration. Don't turn yourself into the trading police, trying to tell them that they're doing it wrong. They're not. That's why we personalize our plans. My rules may not be your rules, and your rules may not be somebody else's. But as long as they belong to you, I'll hold you accountable to them. So guys, I'll see you in 5 minutes. If you have them, post them. Back in a minute. Mic silence. Miss Ellie, did you hear Hayden? Did you hear Hayden? It's Hayden! What's going on? Oh, man. I'm clean. Still good. How you doing? God, good to see you, man. Sorry, I tried to be quiet, but I can't be quiet. Good stuff. She is so excited. She has been staring at your car. She has been staring at your car. Yesterday, Mom goes, Kate's coming home, and her tail went up, and she smiled. Dude, she knows your name. Good stuff. I finished class, and we're going to go to the store for some lunch.
still need to go and buy those and get her pots and stuff.
So I got her 2 really nice ceramics. That's okay. She can use more. This one, it's
Yeah.
She asked for a big cutting board, so I can put
With
that
a
in
cup holder?
pajama. I don't know if that's like maybe juices or
trash
something
can,
going into it
right?
or something. And then I got her from James Avery. I got her it's a sterling silver with a cross, like a clip bracelet.
Mm-hmm.
Pretty cool. I think she'll like it.
I was gonna get her pots, so I don't know how to figure it out.
Get one.
Right?
Just get one.
That's
Oh,
what
and I
it
got her
is.
a watering can too.
You should probably get one.
I know.
And I have to go pick real quick.
Then I'll probably have to get back to class. I don't know. I have to go get her a card too at some point.
Me too. Where is that?
If you want to keep breakfast light, we can go grab lunch around noon, or if you're starving, just pick out and we'll be fine. We'll go do whatever shopping we need to do. Run around, just have fun. Nobody gets here till like 4 or 5, so.
Haley, I wanted to hang out Haley at some point. Go say hi.
I had a feeling Haley was here.
She is. She's here for the summer.
Oh, cool. I almost told Mom, I was like, he wants to spend 4 days here. I bet you Haley's in town.
Well, we and Haley talked about it. It was gross now. We're thinking about would you want to do top golf with us?
Sure.
Those are only golf.
Yeah. Well, Top Golf is okay when it's gross. And the gift card that Mom got me, I can convert to a Top Golf gift card. So it won't cost us anything. The gift card money is just money from the account that she's forcing me to use for golf. So, all right, I've got to get back to class. Normal. What are you watching?
I'm not sleeping on it tonight, so
I would do better though. It doesn't matter. I'll see you in a little bit.
it's normal now.
All right. See you in a little bit.
Okay.
All right, y'all, let's get into that second hour. I love it. I got 50 of you in here. This is amazing. I want to see at least 50 different questions, guys. Make me work for it today. This will be fun. All right, so what we're going to do is we're going to go through and I'm going to start clicking on pictures that you guys posted. And we're going to start here. And this is what we call a strong top. This is huge. Let's see if it goes like that. There we go. This is a termination with absolutely no triggers through. And it reverses the market, guys. This is the precursor for all the great things that seem to happen. As the market comes down, smalls are still outside of the large. The large have almost broken, but not quite. And you'll see that Paul takes a pullback right to resistance, right inside of favorable large triggers. He gets paid on the first one, $100. And he rides that second one down, takes us $200. Guys, that's like the easiest $300 trade ever. Paul, outstanding work. There's another one of those good tops, another one of those 50-50 potential to breaks. And Paul says, you know what? I'm willing to take this trade. And he gets paid twice. Paul, let me give you guys a little chart read here that's going to help you out a bit. Can everybody hear me? We're good? I want to show you a pattern. When you get a second divergence, guys, it typically pushes up just a little bit higher. So when that second divergence prints, just understand that you may get a little push up more. Stop placement was perfect, Paul. That's all it is. Just watching that loss of momentum. But this is the perfect trade. That's two for two, man. I'll tell you what, you have gotten very consistent, Paul. Everything that you do pretty much looks the same these days, except these. But I loved this picture, and I saw this morning. Sometimes, guys, the market is screaming in a direction so much so that it's what Paul referred to as a parabolic trend. It's just a strong trending market. 30 plus bars down, 3 or 4 areas broken. And Paul says, as long as this market is screaming to the downside, I'm going to sell the midband until it stops working. And if you go to the user guide, it actually talks about this in the trend lines. It talks about when the market is a strong trending market, just keep buying until it stops. And it's a great strategy, and it will stop. You will lose. And that's your cue to not take anymore. So, Paul, great trading, great pictures. Thank you for those lessons in here. Miss Jen dropping one in the room. And Jen says, check it out. There is 2 divergences. That's a total termination condition. And then just wanted to highlight a pattern here where midband is support, larger a full bar away, and it just kept you patient, right? And there it is right there. And you also have 3 divergences in the same price range. That's a lot of patterns in one picture, isn't it? I love it. And all it said, you notice Jen didn't go long, right? If she went long at support, she got run over. She didn't go short because she knew it was a termination condition. Oh, you guys studying these things makes it happen. She knew that the triggers were a full bar away, and all it did is it said, hey, you know what? Let's relax for a second. Um, oh, no worries. Andy, have a good one, man. Thanks for being here. Jen, great patience, great pattern recognition. Drop that one into your spreadsheet, right? Take that picture and go to patterns that repeat themselves. Let's do that. Let me steal it. I'm not scared to steal it. Who's going to stop me, right? And I'm going to go to patterns that repeat themselves, and I'm going to put in the gap theory. We've talked about it today. Jen's given us a picture. Jonathan's given us a picture. This has got to be a thing, right? It's got to be a real thing because we keep seeing it over and over and over. All right, Gerard, let's see what you have, my friend. Gerard says, when I have a termination that reverses the market, good things happen. When that termination gives me odds favorable momentum, good things happen. When that odds favorable momentum has the potential to break a key area, good things happen. And then when I just wait patiently for the pullback, notice that you got in at the trigger and it hit the midband. That happens a lot. It makes it easy, doesn't it? And if it didn't get you here, maybe grab it here. And just riding that momentum, Gerard, all the way to the upside. And I got to tell you, when I see brand new students, when I see people that have been with me for a week or two, capitalizing on momentum, taking these very simple lessons, not overthinking them, and getting paid already, I freaking love it, guys. It gets me so just hyped up for what's to come for you guys. Wonderful work, Gerard. And I skipped a lot of people, I think. Maybe I didn't. Maybe I did. I don't know. Guys, if I ever skip one of your pictures, make sure you let me know. All right. Remember when I said one day you'll be a chart reader and you'll find more entries? Well, Ron is the epitome of one day. With odds favorable momentum and everything screaming up and room to trouble, Ron is a huge fan of taking chunks out of the market. And then Ron's belief in termination conditions and losses of momentum at them, he's taken chunks the other direction. And guys, this isn't a high probability trend trade. This isn't odds favorable, clear path, pull back to an area, guys. This is the chart read. This is everything is screaming and there's nothing in my way. Let me get paid. And notice that they're base hits. Just enough. $100 in commissions. $100 in commissions, guys. That's over $200 worth of profit in, I don't know, 20 minutes. That's not bad. Ron's like a high-paid lawyer doing what he does. Outstanding, Ron. It's all chart reads, guys. It's 100% chart reads. Once you can do it, everything works itself out. Not a pivot stop out, Miss Jen. That's okay. Can I talk with the class why it's not and you not feel beat up that I'm going after it? Kinda. So let's talk about, so some of you aren't really familiar with that. What's a pivot stop out? I'm going to show you. We're going to go to the termination conditions section. Sometimes, guys, I'm going to take your pictures and I'm going to turn them into lessons. And there are some of us in this world that feel like it's coming, like I'm coming after you. Oh, why is he doing with that my picture? Jen was just nice enough to pretend to make a mistake for us and label these divergences a pivot stop out. Pivot stop outs are termination conditions. So we're going to talk about this concept a little bit. Does everybody remember that divergence is a loss of momentum? Negative number prints, cyan line to the right. Divergence is nothing more than a loss of momentum. It's not a catastrophic failure. It's not a guarantee of reversal. All it is a loss of momentum. So when I get a loss of momentum, that's it. That's all. End of story. But you guys also remember the recipe for termination conditions. When price reaches that divergence low and the triggers remain above, well, now it's a termination condition. And then here's a pretty cool concept. When price trades below that divergence low and then back above, then we call it a pivot stop out. Here's your pivot. Here's your stop out. Pivot stop outs are strong termination conditions. And the cool thing is they become even stronger if they coincide with Fibonacci resistance or support. So this is an awesome picture. This is a textbook termination condition. And it has a loss of momentum. And it pushes all the way down to support and the large triggers don't follow. And it closes the gap. And then it returns to that resistance with weaker triggers, creates the pivot stop out, reverses the market, strong top, down it goes. This pattern was taken in 2021. Jen's picture of resistance with divergence straight to support in a mid-band, back to the same resistance, was taken this morning. Patterns repeat themselves every day. Thank you for that, Jen. That's a good lesson for everybody. So just a pivot, not a pivot stop out. And I love that you caught your mistake. Not even mistake, just mislabeling. Small and large triggers, green and in uptrend. Triggers of past fib resistance. Buy at midband or support. All right, Morgan, are you in here? You haven't left for work yet, have you? No, I'm glad that you didn't remove it. Parker, if you need tech support, here's the fastest way. So from the Discord, go to tech support and click on that link. And what it's going to do is it's going to have you form a ticket. There's a link for it right there. He's only got 3 people in front of you, and he is fast and he is smart. So grab hold of Jason and let him spoil you rotten. All right. Watch this. Morgan, all I'm going to do, and I'm going to respectfully ask you to answer this question rather than making me. Watch this. I'm going to take what you did. Yeah, no worries, Parker. And I'm going to do this. I'm going to say rule 1, strong triggers. I'm just going to write my rules on there. And then you know what? I'm going to expand on that just a little bit. I'm going to put a Y, not a T, a Y. And then I'm also, and you've already labeled this, but I want you to see this. Clear path? Absolutely. You've identified both. Your large chart read is spot on. And then Morgan, this is why I think language is important. I'm going to write the rules for rule number 3 here. Buy a pullback. Whoops. Buy a pullback at an area inside of triggers. And I am even going to give you a little bit of a cheater there. I feel as though this is the most important word. Buy a pullback at an area inside of triggers. So if I were going to make a decision, right? I've got, whoops, that's not what I wanted. If I were going to take this trade, I've got support one tick away from my triggers, and it's a little bit beyond, or I've got a mid band floating way beyond my correction point. What do you think? Which one do you want to be in at? The one that's way beyond your correction point, or you want to be in right there at support, right there next to the triggers, right where we expect the market to go to and give it something solid to bounce on? And then here's an even cooler thing, Morgan, that you're going to begin to notice. Do you notice how this fib is this fib, and this fib has every trigger above it? And if price reaches Fibonacci support and the triggers are above, it's like to happen. It happens, Rob. Rob, it happens every day, 1,000 times a day. Why do I say areas inside of triggers? Because that's the only way to take it? No, because that's the best way to take it, Rob. The mid-band's floating in the middle of nowhere, Morgan. So check this out. If it comes to this mid-band, it means you've gotten all the way down here. You've already gotten back below the areas that you're expecting to hold. And this is where, and Rob, this is for you as well. Let's say that I'm a stickler, and I'm like, man, there's my triggers, and there's my area, and man, my area is outside of favorable large triggers. Son of a bitch, what am I supposed to do? One of the cool things, guys, is you can say, I think it's going to hold. My termination condition rules say it's going to hold or likely to hold. I've got momentum up. My trend is up. Everything says up. You know what? I'll buy at support, or I'll wait for confirmation through reversal bar. I would, Morgan. And you know what this is? This is one of the momentum trades that you're going to see in the room a lot. Momentum, when the small triggers break the area and price snaps back to it, that's a momentum style trade. It also lines up pretty nice as a trend trade here too. It's blurring the lines. But do you see how it doesn't fit the rules completely? So once you know your rules so well that you can say, man, that fudges them a little bit, I'll wait for confirmation. I'll get into this market on this reversal bar, or I'll get into the market if this bar starts to go up, and I'll keep my stop right behind that fib I expect to hold. Does that make sense? Is it high probability trend trade? Not quite. Is it a hell of a good read? You better believe it is. You will learn how to take advantage of that one, and you won't hesitate on this trade. I love that trade. That's one of my absolute favorite looks for entering the market because I've got momentum everywhere, and I am such a firm believer in momentum. And then Jonathan, uh-oh. Did I miss it? All right, guys, hold on. I got to do a quick little reboot on Discord because I tried to click on Jonathan's picture and it's not letting me do it. So this is the easiest way to fix it. Everybody sit tight. I will be right back. I'm pretty sure you can hear me from the great beyond. Moo-ha-ha-ha-ha. So let me pull Discord back up, get everything where it needs to be so that you guys can see. It's weird. It does this every now and then. How are we doing so far, class? You guys feeling pretty good? Feeling like you're learning anything? Things starting to get a little easier? You guys that came here a week ago, it's like a different animal now, isn't it? All the things that were so confusing start to get a little clarity just from repetition, I hope. You guys hear me? I always tell people that's how it goes. All right, so Jonathan, you asked about the gap theory here and the implications. To be honest with you, the gap theory has zero implications in this look. By the time we get to your trade, it is 100% in the rear view mirror. But let's go through and do the full. And Malcolm, I tell new users that all the time. I was like, and nobody believes me. It's terrifying on day one. It feels like a lot. I tell people, just hang out, relax, have a good time. Don't put any pressure on yourself. A week from now, you'll be floored at what you're seeing. And it happens 99.9% of the time. The key is don't look for everything, just look for the good stuff. So check it out, Jonathan. Price pushes all the way to the midband, all the way to support. Large triggers don't follow, and it comes back and it retests resistance. Resistance holds, right? Rule number 2 says, Jonathan, whatever you do, whatever your opinion is, whatever is going on in your life, don't you dare go long, my friend. You don't have momentum, you don't have a clear path. And then from there, we've pretty much set the tone. Resistance held, pushed back, the buyers tried again, and the sellers said hell no. And then they create odds favorable momentum. And I want to say Jen may have posted a picture where she was looking for the short here. Morgan, there is your momentum trade, my friend. That same look that you had, where the small triggers break through and it snaps back and goes once we start to clear here. And then this is also one of those momentum trades right off the one-to-ones. So, Jonathan, what you've done is you've said, I have odds favorable momentum. I have a clear path. I'm just going to jump in and hope for the best. I can tell you right now, Ron has built a career on this trade. How did this one turn out, Jonathan? That's the S&P, right? It went a little bit. I think your entry was right about here. And then we had a fib update. Okay. So let's talk about management then. Is that because I think that is what people miss out on this trade. We're going to talk about two different things. The first thing is you absolutely had momentum and a clear path over here. Do you see where the small triggers are in relationship to the large triggers on this chart, Jonathan? They're inside, meaning that we've weakened the large triggers. Do you remember that lesson from rule number 1? The difference between odds favorable, that separation, and weakness. This is a very important lesson because this is telling you that the market is slowing down. And then closing on the wrong side of those triggers is confirming the slowdown. And then when divergence prints, it's confirming the slowdown. And I don't know if you kept your stop in the same place. I hope that you didn't. And this is one of the things that happens as you get better with the software, is you begin to say to yourself, there's nothing going for me in this trade other than the hope that it continues down with momentum, which is okay. But then the second half of that, every entry needs to be managed. So you have to say to yourself, if I lose momentum, I'm going to exit this trade. And then you have to decide what's a loss of momentum. For me, smalls inside of the large is a loss of momentum. A close on the wrong side. So maybe that stop right on the reversal bar marker. And that would be a close on the wrong side. And what you can do is you can minimize the losses when these don't work. No worries, and that's perfect. And thank you for posting it because now we get to have a conversation about it. If you're gonna take this style trade, the most advantageous, there's that word that I love. The best of the best look on your trigger lines is when the bars are outside of the small triggers or the bars are outside of the small triggers. This is your fastest, quickest, hardest to stop because the bars have to come all the way back inside the triggers before you ever lose momentum. So when they're kind of riding it and the triggers are inside, it's easier to lose momentum. So great picture. Good lesson for all you momentum traders out there. And I think what you'll find is that the more you see these patterns, the easier they become to manage. All right, let's see what we have. Kenan is asking, is this the best place to take a trade? Wow, what did I do? Let me make that a little bigger for my tired eyes. Um, Kenan, do you want the reality answer? I'm gonna tell you. So I'm gonna give you two answers on this one. No, it's okay. It's all right. So what do we have? Good momentum. Absolutely. No termination. So you did your homework. Your large chart read is 100% perfect. Bravo to you. So what kind of trade are you taking? Would you believe that that's a momentum trade, right? The same one that we just talked about? I'm going to give you, I love this trade. Maybe not the best place to take a trade, but when you ask me questions like that, I always give my 2 cents. I think the best place to take this trade with all that momentum is right when I clear this trouble spot. And I'm going to ride that momentum until I get to the wrong side of those small triggers. I think you nailed it. I think you did an absolutely outstanding job. I think you cut yourself way short. Because one of the great things about momentum is as long as it continues, enjoy the trade. And then maybe you just follow it with a reversal bar marker or something like that. Because if this momentum runs forever, man, have fun with it, right? Get paid from it. And with the large chart with momentum, with the large chart with a clear path, we're not going to let these little pink dots scare us. But I like that you recognized them. Can I trouble spot? Hamid, I can trouble spot with the best of them. I referred to the divergence high as a trouble spot. Is that what you were asking? I was referring to the divergence high, yeah. So the cool thing is, well, down here, maybe we didn't have it. But once we're up here and everything comes together, I love this right around 62, 63. And then if you want to get out at 79, that's 160. And let's play calculator real quick, Kenan. You traded a 7 lot and you got 5 ticks on it, right? Times $10 a tick. That's $350. That doesn't suck. Not gonna lie, that's a technical term. What if you get in at 60, we'll say like 63, 64, and it's 15 ticks all the way up to 79. So hold on, let me get some math going. So it's 15 ticks times a 7 lot times 10 ticks. Exact same trade, exact same advantages, exact same exit, but by being aware of clearing the trouble spot and maybe taking advantage a little sooner, you tripled your money almost. And this is one of the wonderful things about what we do, guys, is the more you see this, the easier it becomes. The more you see this, the sooner you take these trades because you've developed the trust. And what you realize is that if you're going to take a momentum trade, the sooner you get in when the momentum is the best, the more likely it is to continue. I love those aha moments. So go back and study it. So let's talk about how we can study this a little bit. I'm going to open up a small chart. And when I'm outside of those small triggers, look at the little runs you get. When I'm outside of the small triggers, look at the runs. And then once I get inside, look at the fluctuations. Do you see that? Look at that. I'm outside. Oh, and it just keeps going. And I'm outside and it just keeps going. And I'm outside. And there's no reason to exit until I hit a red fib. But once I get to the wrong side, blah, 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 blah. Again, technical terms, guys. Blah, 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 blah. But look how they stayed outside all the way to the blah, blah spot. Outside. Not saying all of these are trades, but are you guys starting to see that pattern a little bit? Using that bar location, wow, on the small triggers. That's what we call the momentum phase. And when I'm in the momentum phase, guys, good things happen. And when my large chart says everything is strong to the upside, notice how the large chart's in the momentum phase as well. And then there it is. Clear trouble. Zoom. Ron, are you in this one? Ron's probably still getting paid on this one right now. Because Ron says when the back of the bar clears trouble, he's going to look for an entry, and he's going to go from 36 to 38 and a quarter on a 6 lot, make $700 in this momentum phase, and then go to the beach and chase chili dogs. Does that make sense, everybody? You momentum traders, momentum phase. And watch this. If I take everything off of my large chart, let's do a momentum phase lesson. I'm going to take everything but trigger lines off of my chart real quick. You guys are going to love this. You guys that love momentum trades, about to change your world. So we'll let that load up real quick. While that's loading up, let's go to the next chart. Kenan, your first post was a rock star post because not only did you kill it, but you also created a lesson for my classroom, and I appreciate that. Thank you. All right, Paul. There is no name for this trade. Strong triggers, clear path, pull back to the midband. You made a decision, right, Paul? That's all it is. Oh, I get to pull up this picture. Paul did this for me on purpose. I know he did. These are your advantages. Let me turn this into a single box. All right. So let's go through Paul's picture real quick. Guys, make one of these for your desktop. I'm telling you, it pays dividends. Paul has momentum. Paul has a clear path. Paul doesn't have an area inside of favorable large triggers. So Paul knows, because he speaks to himself in terms of advantages. Paul's saying, with momentum and a clear path, am I willing to fudge my rule a little bit? Am I willing to get in at a mid-band, to take a little bit of risk, to go with that momentum, to go with that clear path? Paul says, yes, I am, because I believe in momentum. I believe in letting the large chart lead the way. And he takes it, and he gets paid, and then he tightens up because he knows it's not the perfect trade. This is beautiful. This is where you guys get when you start seeing things a couple times, when you start recognizing patterns. So Paul, outstanding, man. If you're always talking to yourself in terms of advantages, the likelihood of you learning how to bend your rules a little bit and do it well goes up exponentially. Thank you. Cav says termination, right? It's a tick off. Cav knows how fibs are formed. Termination condition reverses the market, gives odds favorable. Cav says, you know what? To hell with you. No, you cleared the termination condition. You're in at 0375. You're in up here. Nope. Cav says, I don't care about your termination conditions. I'll trade into you. Who cares? What are you going to do? You going to stop me? No, because I'm going to do it from a stacked area inside of favorable large triggers. And guys, this is a NASDAQ trade. Cav saw those small triggers a full bar away. This is a NASDAQ nuance for you guys that are NASDAQ traders. And he said with those small triggers a full bar away, with odds favorable momentum on both charts, with areas inside of favorable large triggers, I'm not just going to jump in willy-nilly. I'm going to let it start in the direction I want this thing to go to get up to that fib, to get up to this fib. And Cav, you absolutely destroyed that trade, nailed that trade. New users, don't you trade into termination conditions. I gave you blanket rules to keep you safe. Once you're a chart reader, you'll be floored at the money that you can make. You'll be floored at the opportunities that you see. And Cav's just at that point in his career now where he sees more opportunities. He reads advantages and doesn't let a disadvantage or two take him out of a trade. He embraces the strength. All right, Jen, you're absolutely right. The background is red. Nicely done. Green background. It's a mess. So let's go through the full reads. I love colors. I'm an artist. It's fun for me. What's the large chart read? That's a strong top. Can we agree? Hey, Morgan, have a good one. Thanks for being here. Thanks for posting. Looking forward to seeing you tomorrow. And then Jen also has odds favorable momentum. And then Jen also has not a clear path because the small and the large haven't broken through. It has the potential to break, but it hasn't broken. And Jen's pretty astute. And she says, you know what, Mark? 3 divergences in the same price range is a termination condition. Trigger lines that don't match can never be favorable large triggers. This isn't my trade. This is a mess. Nothing matches. And there's more to it than red, green, right? She starts counting advantages and she's like, oh, I love this. This makes people swoon. Man, that momentum, children sing songs about that momentum. Potential to break from a good top. Oh, life isn't so bad, guys. And she goes, wait a minute, not a clear path and 3 divergences and the colors don't match. But didn't just the colors alone make you say no? And when you turn it into a chart read, it helps. Ooh, I love that European spelling of colors too. But that's it. You know that if the colors change, if the large triggers are up, you can't have favorable large triggers. You can't have your rules met. It still may go down because of the large chart, but you're not just jumping in willy-nilly. Beautiful read. And I think some of the most valuable pictures that we can ever take as traders are the pictures when the rules aren't met, the pictures when it's not perfect. So you know what it looks like when it's not perfect, right? Odds favorable, and it just never gave you a pullback. Jen, this is one of those times where maybe you graduate to that next level and you find that momentum trade with everything screaming right off of the termination condition that held, right? Maybe one day. It doesn't have to be today. Keep taking pictures. Keep talking about it. So I want you to re-annotate this chart because this is how plans get built, guys. I've helped build a few. And I'm going to give you Ron's rules. They're not my rules. They're not Nexgen's rules. When that's back end of the bar clears this area with odds favorable momentum and you clear the path here, as long as you're on the right side of these triggers, have fun. That's a momentum trade. It's not taught by Nexgen. That is, I got to give 100% credit to the man himself, Ron. All right, Jonathan. Odds favorable, clear path. So we're going to go in again. We're going to talk again. Sorry, my kid just said goodbye. You have to know what kind of trade you're taking. This is important. This is so important. So what you've done, and this is kind of cool. I like the way you did it. So this is that momentum trade that we just talked about with Jen. Do you recognize that? Everybody, do you see it? There's an opportunity to get paid from there to there. And once a momentum trade fails, and this is worth writing down. Once a momentum trade fails, your brain has to switch from momentum. Momentum is lost. I'm exiting the trade. I don't want to be in it anymore. And then what you've done here, Jonathan, is you've done the new user oops. You've got the reversal bar. This is where the momentum trade is over. Does that make sense? Let me ask that first. I'm looking to make sure Jonathan is still in here. Well, I'll tell you what, for those of you that are looking for these momentum trades, does that make sense? That once we get to the wrong side of these triggers, it's over. Cool. So what do failed momentum trades typically turn into with this look on the large chart? Once I get that reversal bar and I get out of my momentum trade, I start looking at my trigger lines. And I start looking for areas inside of my trigger lines. And what I have to say to myself is that once the momentum trade is over, once I'm on the wrong side of momentum, once that is no more, I've exited, I've made my money, I feel good about it, my next trade is potentially the high probability trend trade. Does that make sense, everybody? Can you give me a why? Because all we're doing is we're talking through reads. All we're doing is talking through reads. Okay, awesome. So, if a failed momentum trade may become a high probability trend trade, one of the biggest mistakes, and guys, I'm going to tell you right now, I made this mistake twice yesterday, is that if you have a stop inside of the window of opportunity, you're going to be disgusted with yourself when price from a failed momentum trade pulls back to an area of support inside of favorable large triggers, stops you out, and it turns into a winning trend trade. And I don't know if that happened. Let's go look at the S&P. And this one, it didn't happen. This one did bounce off the triggers. And that's kind of a weird thing. That's kind of a weird little scenario. Trading with momentum is always a win, right? It's good. Jonathan, I need you to be able to repeat this though, right? So why did you get in where you got in? That's the question. You don't have to tell me in the room, but you have to ask yourself, why did I get in where I got in? If you want to, Muser. But here's the deal. If you're going to do it, make sure you have momentum on both charts. If you're going to do it, make sure that both charts are perfect. And Jonathan, the only reason I ask this question, and you don't have to answer it, is because it has to be repeatable. Is taking a pullback not in an area. Okay. There's no reason to believe that the market's going to go from right there. And that's kind of where I'm going. And again, let's go back and look. And this is a rare thing. Momentum wins. But look how deep it gets in the triggers here, right? And look at how deep and how it pulls back to support here. And look at how deep it gets into it and it pulls back all the way to support here. And the reason that I say this isn't to knock your trade at all, but the expectation, and I can tell you just, I've been doing this for years. Order submitted. My expectation would have been to have a limit order right there, right at the area inside of favorable large triggers. Because once it does this, this is the only way that I can gauge where the market may bounce. Anything else is a guess. And if I get in all the way up here, my stop has to go all the way down here where that trade should fail. Order canceled. So anytime you take it, pullbacks are great. Rule number 3 says pull back to an area inside of favorable large triggers. That's where the advantage comes in. Once this momentum trade is over, that's the next trade. If you are in this trade and you opted to hold, that's cool. But this entry is going to work less than an area inside of favorable large triggers. Does that make sense, Jonathan? Not knocking the trade. I like what you did. But my goal is always to make sure that you guys are repeatable, is always to make sure that you guys can do the same thing over and over and over again so that you can determine whether or not there's a statistical advantage. Guys, this is one of those momentum trades. And this is a NASDAQ trade. So Cindy's trading the NASDAQ, and NASDAQ has different rules. When the small triggers break the pink 1-to-1s, guys, on the NASDAQ, we respect those pink 1-to-1s. There's momentum. She buys the pullback. And once again, it's a momentum trade. She says two divergences. I'm out of the trade. Yeah, no, Jonathan, I will always comment. I don't ever want people to feel like I'm not. I love it. I love winners. Winners make me happy. But this is where, let me show you a couple things that I see. And this may or may not be true. You don't have to tell me if it is or not. Getting in for most people before the area is very much a fear of missing out, afraid that the market's going to go without them and they don't get paid. And that's okay, right? Fear of missing out happens to all of us. But when I see an exit, and I know you're brand new, so this is for the people that are a little more seasoned. When that bar fluctuates down and you take an exit for 2 ticks, it means a couple different things, or what it could mean for traders. The first thing is you don't believe in the trade. And it may be maybe you do, maybe you don't, maybe you had a reason, but you don't believe in the trade. There's no trust when you move stops for no reason. You're protecting an investment that hasn't had a chance to mature. Or maybe you know that you're in the wrong trade, right? Or maybe, like you said, is you just chickened out. And that's cool. Chickening out happens. I've seen the word chicken a couple times in the room this week. So here's the deal. When you're on sim, Jonathan, everybody in the room, when you're on sim, I need you to have balls of steel. I need you to have titanium ovaries, guys. Let it run. Get stopped out. If you're afraid to lose pretend money, what are you going to do when it's live? This is the magic of simulator, ladies and gentlemen, is you can take it's one bar. You entered on a red bar, Jonathan. But I like that you use the word trust. And once again, let me take a picture. Do you know what I trust with this look? Wholeheartedly, without exception, absolutely no wiggle room. I trust areas inside of favorable large triggers, right? There's no such thing as a termination bar. No such thing as a termination bar, Jonathan. Look at your large chart real quick. What does your large chart say? At the time of your entry. Almost. That's the best of the best look ever, right? Look at this. Hold on. Where'd it go? Where's my large chart? Does everybody remember momentum? And that it's likely to push the market in the direction of the trend, that it breaks key areas, that momentum is the greatest thing ever. Jonathan, would you chicken out with this look? And you may initially, and some of you might initially. My brother used to do this to me, and it aggravated the ever-loving crap out of me. Is Jonathan, I would do what you did in the beginning, same thing. I would chicken out and jump ship, and he would go, Mark, look at your large freaking chart. And I want you to see something, and I think that this creates such a beautiful picture for new users. I want you to see that little snippet where you got in and got out. That's it right there on the large chart, Jonathan. And it takes a little bit to be okay with this because you see these fluctuations, damn indeed. You see these fluctuations on a small chart, and there's such a pucker factor. And there's another one of those momentum style trades. But we get so terrified by these little fluctuations on a small chart, right? Watch how much this fluctuates. Positive, negative, positive, negative, positive, negative, positive. That'll drive you mad, ladies and gentlemen. That will drive you mad. You didn't get to it yet, did you? Not even a little bit, Jonathan. Have you ever had a plane fly over your house and sat in your kitchen absolutely terrified that it may crash on your head? No, you're not even there yet. It's not even in play. So guys, with momentum, if you jumped in, where's my first reversal bar? Right there. Let's just play the game. Does that make sense? But what I want you guys to see is not whether this is a trade or not a trade or anything like that. I'll put my stop way down here. I want you to see how many times this number changes. It is enough to drive you nuts, guys. If you focus on the ticks instead of the big picture, you're going to be just sore all day long. You're going to be exhausted. Have you ever taken your dog for a walk and he stops and sniffs everything 1,000 times and it takes you an hour to go a mile? Has anyone other than me ever done that with the dog? And even though all you did was a mile, your dog seems exhausted and just wiped out. It's because it's because they sniff everything. Because in that short little span of time, they are freaking exhausted from all the work they put into it instead of just walking. So right now, you guys have every advantage, right? You have momentum, you have a clear path. You're not on the wrong side of the small triggers. I'm just going to leave that. I'm just going to follow the reversal bar marker behind it. This is a jump in, right? All I did was jump in. I'm relying on momentum. I don't know what it's going to do. Hell, I don't even have areas on my large chart. We can do the Ron approach, and all I have to do is get to right there. And I'm still on the right side of everything, right? And I'm behind it with a reversal bar, and I'm close to my target, and I still have momentum. And I just jumped in, and I'm not looking for a home run, and all I need is one more freaking tick. And there it is, guys. Oops. Let me put my entries on there. So for you guys that are wondering about those jump-in trades, Muser, the better entry was back here, but that was still $225 while I'm teaching a class, guys. $225 taking advantage of momentum, and the only thing that I have on my large chart is trigger lines. And I still didn't get a reason to exit this trade. Can we get like a hallelujah or something in here? Guys, this is what we do. Once you read your charts, once you believe in the advantages, you will be freaking amazed at what you can pull off. And even more so, guys, you will be flabbergasted. There's my good word. You will be flabbergasted at how effortless it can be if you don't overthink it. Love it. Yeah, Tony, you've been doing this for a while, but isn't that awesome? Momentum for the win. You pooched it, you're never trading again. Oh gosh. I hope that's not a I hope that's not a prerequisite for never trading again. Jonathan, if it can be broken, I've broken it. If it can be done wrong, I've done it wrong. That's one of the things I love about this class is, guys, I've shot myself in the foot 1,000 times. My goal every day is to keep you from shooting yourself the same way I did. Find a different way to shoot yourself in the foot. And then we'll diagnose it and see if we all get better for it. That's what the class is. So I'm going to take a break, guys. I'm going to go sit on my hands for a second, refill my water. So we've gone through all the pictures, I think. We've hit every picture. We've talked about every scenario. We've seen everything that you guys have presented so long. Isn't that pretty cool, Tony? So now I have to say it before I leave because you guys know I like to talk. How much fear does that put into you? Seeing those areas. Paul, I couldn't even see the fib. I didn't even have it on the chart. How much does this scare the ever-loving crap out of you? You should respect it, right? But remember we said strong triggers break things. Small chart confirmed it. Just ride the momentum. There were so many opportunities in this move that aren't high probability trend trades. Ah, I love that, Jonathan. Welcome to the family. So Paul, I wouldn't have either. Actually, that's not true. Tony, I will when I see him. So let me show you guys what happened on the way up with all this momentum. Let me get the whole view. These are the opportunities that don't necessarily fit the high probability trend trade. When price clears the area, there's an opportunity to jump in with momentum, get out with the loss of momentum. Sit on your hands and don't do a darn thing until the fib clears. When the small triggers break the fib and it snaps back to support, I'm buying support all day long, and I'm riding that momentum until it gives me a reason to exit. Guys, the only place where I pump the brakes and do absolutely freaking nothing is right at a key area. How come? Because decisions are made at key areas. They potentially can stop the market. But why not trade to them? Why not trade the breakout, right? And you'll get to the point where you're good at this. So it looks like we might be getting our first reversal bar. Do you notice that our triggers are weakening as well? Do you think it's a coincidence? But I got out at 46.25. I just got paid rather than waiting for the loss of momentum. So, Tony, if I see him, I'll take him, man. If I see him, I'll take him in class. Most of what I do in class it's 100% educational, guys. It's never me telling you to take the trade. But here I have a 50-50 trade. It's got a million divergences. It's got split triggers. Maybe not my trade. I love trading live. There's your loss of momentum, guys. Let's see how far down it goes. Here's the thing that you have to accept, is that it could pull back to here. It could pull back to here. It could pull back to here. The best thing that you could ever do in life is say, I don't know. I don't know if these weak triggers are going to create a retracement all the way back. But what I do know is that I don't have rule 1 and I don't have rule 3. And if I'm the kind of guy that likes advantages, what that means for me is that I'm not willing to give up 66% of my advantages and just hope. So anyway, I'm going to take that break I talked about, guys. I'll leave you with the S&P here. And if there's no questions in the last hour, we'll just wait for rules to be met. We'll see if we can't find opportunities. But guys, go stretch your legs. I'll see you in a minute. Hayden's cologne is killing me, period. He went to go see Haley. I could not breathe in this place. All right, guys, last hour. Let's have some fun. What do you guys think? Momentum in, momentum out. Is that easy enough? Can you control your emotions to be that black and white? If momentum gets me into a trade, then perhaps momentum takes me out. Whoops, that's my untitled workspace. Sorry, guys. What do you want to talk about? Man, it did go down with all that momentum. We'll see what happens. What do you guys want to talk about? Ron, making you proud, right? Um, I'm going to start doing this. Things you have to know before you ever sit down, guys. You got to know what your rules are for entry. My secret fibs. Oh, yeah, I need to address that. Thanks, Cindy. I don't have secret fibs, guys. I jack with my charts so much for educational purposes that don't trust my charts. Um, I also I also reboot a lot and I come through a lot. Oh man, go have some fun, Ron. Enjoy it. Boy, I don't. Tony, if you knew me, you'd know I'm not smart enough for extra fibs. Let me say this, then we'll go back and look at your chart. Guys, before you ever sit down to take a trade, you have to know what it's going to take to get you in. You have to have a set of rules, and not just a set of rules. Oh, if this and kind of maybe blah blah blah. Guys, it has to be solid. It has to be exact. It has to be the kind of plan where you can go find 100 pictures of your trade and they look the freaking same, and 70 to 80% of them win. That's how plans are built. But then you also have to know what's it going to take to get you out. I'm just going to do a little thing here. What's it gonna take to get you out? This was a great example, right? If I enter a momentum style trade, then a loss of momentum will take me out. And it really is that simple. Because what happens is there's a lot of variables. If I'm in a high probability trend trade, well, then I'm not really interested in letting one divergence take me out, right? But if I'm in a 50-50 trade, I'm cool with that divergence taking me out. If I'm in a momentum trade, a loss of momentum has to take me out. And there's all these different variables. So when you keep it simple initially, it makes it easier. But if it's not drawn out, guys, you're prone to let adrenaline, opinion, fear, greed fuel all your moves, especially on this one. Know your daily goals. Show of hands. Let's all be real vulnerable for a second. And I'll start with it. Who's reached, doubled, tripled their goal for the day only to have a losing day at the end of the day? Anybody other than me? Who has exceeded their goal excessively only to be down money or blown account at the end of the day because you start feeling invincible? So we've all done it, right? And now here's the good one. Who's done it more than once? We all have, guys, because we're all human. This is why this classroom is such a value for everybody. So here's the deal. How many times do you have to get punched in the nose until you stop mouthing off, right? How many times do you have to give it back before you're willing to shut it down? And I'll tell you guys, I am the king of shut it down now. If I get close to my goal, if my goal is 500 on the day and I'm at 480, you couldn't pay me to take another trade. I just want to get paid. So know what it is. And then here's the other one. We all say that we have a stop loss, right? Do we want to play the game again? Who says I'm willing to lose $700 a day and $2,500 later, you're signing up for your new Apex account? All of us. So guys, this is all part of having a trading plan. And this is what we do here is you've got to develop such a trust in what you're doing that you take it without hesitation. And you've got to develop a very strong sense of why you'll enter a trade, why you'll exit a trade. And then you've got to just keep working on committing to it. You've got to commit to your entries. You've got to commit to your exits. You've got to commit to your goals, and you've got to commit to your stop losses. Trading is a business, right? Weak triggers, no areas. That's it. Before this room, you were an expert at resetting Apex. I'm embarrassed how many times I've reset Apex. And all of it revolves around me not following my rules. Maybe I'm emotional. Maybe, I don't know, I'm hungover, whatever. So do you notice how there's no rules, Matt? And then Jonathan, this is why I'm hesitant to just jump in at triggers. Because while yours work down here, more often than not, this is kind of what it looks like once we get beyond that. And this is why I blanket you guys with those rules. This is why I blanket with you with, in the beginning, insist on momentum. In the beginning. I like it, Parker. I love that you're making profits already. Great job. And remember, post those pictures, man. Let's get some feedback and see if I can't be helpful now and then. It's still going down, ladies and gentlemen. But Mark, it was green. But Mark, I had triggers. This is why we don't hold on to momentum trades. Tony, let's see your charts, bud. Hold on, let me get back up there. Sorry, I'm just having fun. Thank you for not circling the charts where there's something different. Hold on. So you've got a 5-1 at 46.81. I do not. But you don't on this chart, which is interesting, Tony. You've got the 5-1 here, but it's not showing up over here. I might have Jason take a look at that. It's already beyond my scope of understanding. You haven't reset. And that may be it too. So you might want to either chart. I don't have it on either. And I rebuilt this workspace yesterday. Guys, you can always right click and reload all the historical data and let it go through and run the calculations again. So I'll do it on mine, Tony, and we'll see what it does. What's up, Jeremy? I haven't seen you in here in a while. I like it when you guys come back to me. I like it when you guys come back to the room, even if it's just to say hey. Most of you guys come back because something's not going right. I hope that's not the case. But if something's not going right, let me help. Guys, if you have a question, let me help. If you have a problem, let me help. If there's something you need clarity on, let me help. Jerry S., once this is done calculating, right when I did it, I realized that I should have gone to that crude oil because I'll give you a great lesson on it. Sorry I missed that one. Man, it's good to see you in here. There's always something to learn. You guys teach me something every day. Every day you guys teach me something. Every day you guys make me think about something differently. Cav, have a good one, man. Every day you guys make me a better trader and more focused on advantages. And man, I sure do appreciate it. You know what, Daryl? I pop in every day and I'm still a dumbass. I'm not sure it's effective. Yeah, Tony, mine looks exactly the same, man. You may want to try a reload, maybe a reset, something like that, see if it helps. Make sure we're the same days back. And then Jerry S., don't go away. I've got your lesson coming. I just have to let these calculate. Otherwise, if I try to switch over to, there we go. If I try to switch over to crude oil, it's going to kill me. All right, so let's do this. And let's talk about it. And I haven't really studied it, so I'm going to study it right here. See if we can get all those in there. I'm going to pull them up. I'm going to make it look nice. All right, guys, chart reading lesson. So this is clearly odds favorable, potential to break, right? This is a 50-50 trade. And Jerry's saying, man, Mark, I know that 3 divergences in the same price range is a termination condition. 4 is probably even worse. Is that kind of where you were thinking? This is where I have to go through, and this is one of the reasons that becoming just familiar with what you're seeing in the moment helps a lot. If I extend this divergence all the way over, small and large get through it, it's out of the equation. If I extend this divergence all the way over, small and large get through it, it's out of the equation. If I do this one all the way over, small and large got through it, it's out of the equation. Jerry, the same way I will use, where are my triggers in relationship to fibs? Where are my triggers in relationship to one-to-ones? I'll use the same thing, small chart. So even if this one was iffy in the moment, I'm looking at 2 divergences. Does that make sense, Jerry? And then if you really want to mind blow a little further than that, one of the things that I see a lot when I've got a couple divergences is it takes out that previous pivot by a tick or so, and then it's likely to continue down. So what it does, it says with this divergence, just be ready if you're going to take it. A lot of momentum, small's down, large, everything's down. But I'll use that idea. Once small and large get below this area is in the rear view mirror. Once small and large get below this area is in the rear view mirror. So use that same idea for divergences on the small chart when you're trying to figure out those 3 divergences in the same price range. Does that make sense? And now we're just weak triggers at a termination condition. Are you guys with me? Did I lose you? Cool. Hopefully that was helpful. Everything's chart reads, guys. Everything is chart reads. Everything starts at chart reads. All right, Jonathan, since you asked. I hit a mid-band and my large triggers are a full bar away. Does everybody remember what that's called? That's it. What does that mean? It means price may return to these large triggers, especially from a bad top. Not guaranteed, right? Not at all guaranteed, but just for grins, while I look at Malcolm's chart, I'm going to put a circle, or that's a square, around those triggers. Let's see if the prophecy fulfills. All right. Malcolm, strong top. Heck yeah. Strong triggers. Egads. Clear path? Not quite. Malcolm, do you understand the concept of the 50-50? That would be the one thing. And I do this not because I don't like your trade, but because I think that being able to repeat the same thing is important over and over. So your large triggers are still above the area. Your small triggers are absolutely smashing through from a termination. So these areas are more likely to break because of that strong top. Great recognition. And I want you to see how this works. Into the area, you sit tight. Into the area, you sit tight. Into the area, you sit tight. Reversal bar coming below the area, and that's when you get in. And then once it pulls back here, it's just another trend trade, and you take it down to trouble. I love this, Malcolm. You took kind of the let me break below and see if it goes, but when it didn't, you knew exactly where the market was likely to continue. And I am optimistic in saying that your stop was where the market shouldn't go. and you were able to capitalize on momentum all the way down to the trouble. Does that sound vaguely familiar? Did I read it right? I mean, you did a great job annotating it. Perfect. Takes a little trust to sit through that, doesn't it? It really does. Takes some trust to sit through that. That's trust and momentum. Love it. Hasn't closed the gap yet. That termination condition's holding for the time being. It is 11:22 in the a.m., ladies and gentlemen, Eastern Time. So it's okay to ride that green and trust I might not have done it. Hold on. To ride that green and trust I might not have done it yet. So Jonathan, don't ever trust colors. Because everything is red, but I'm right into a termination condition, right? It turned green here. I sure as hell wasn't going long. If you want to trust something as a brand new user, if you want to put your eggs in just one basket because that's how you roll, trust odds favorable momentum to push a market. That's what I trust. That's what I trust. Does that make sense, Jonathan? So if I'm in right here and I'm looking large scale, I'm saying until I get a reversal bar or something, right? A weakness, ride that thing. Have some fun. Cool. Good question. And then Malcolm, did you read it right? So it was 50-50 the whole time, Malcolm, which means, honestly, see how the triggers are split? If you get in on a reversal bar on the managed chart, everything but the clear path. You do not have a clear path. You have a 50-50. Jonathan, do whatever you want, my friend. You have a 50-50 there, Malcolm. Does that make sense? That's the only challenge with the large chart read, is it's not clear because the large triggers didn't break yet. You still have a couple Fibonacci areas that aren't broken. Does that make sense? So that's my only challenge with your read, is it's not a clear path. It's one of those 50-50 looks. For you to get in after this is no longer a 50-50, that's what I needed to hear. That's what I needed to hear, Malcolm. You ready? Small triggers are through, large triggers are not. Small triggers are through, large triggers are not. Small triggers and large triggers are through. You technically don't have a clear path until right about here. Does that make sense? Cool. It doesn't mean that there isn't opportunity. There was certainly opportunity. It just wasn't high probability opportunity. So you railed out a nice chart read and took all that momentum with the potential to break and took it to the next trouble spot. But this is one of those things where I'll get you on language, because if you believe that this is a clear path, then you may not manage it as aggressively as perhaps you should, if that makes sense. No such thing as a soft bottom, Jonathan. Well, don't tell my wife I said that. Jonathan, do you see how we reached the support and the triggers haven't broken? Doesn't matter on a small chart. If the large chart doesn't say go, it doesn't matter on the small chart. Does that make sense? And that's one of the biggest safeguards. Because if you let the small chart talk you into a short, right, it might work. But patterns tell me that when I reach a midband and the triggers are a full bar away, it may close the gap. Patterns tell me that if the small triggers don't get through fibs, that it's acting as a termination condition. And even though that looks like the best short in the world, I'm fighting things. I'm fighting not having a clear path. I'm fighting a gap theory. And the likelihood of this working goes down exponentially. It doesn't mean that it won't work. The fact that it's coming from a bad top, not a termination condition, it just kind of amplifies the likelihood of this not working. Does that make sense? Yes, I do, Jen. Awesome. So all this means right now is don't go short yet, Jonathan. That's all the gap theory means right now. Um, and I have people go, but so I'll show you how to potentially take this one. That little snapback right there is your potential momentum trade, and it gets out quick once it hits the midband. You'd have to be so fast to do that. Jen, I don't just arbitrarily trade the gap theory. Why not? Because my momentum is down right now, isn't it? My triggers are down, my trend is down, everything is down, my smalls are below the large. And every morning I tell you guys that's a good way to get the ever-living crap kicked out of you. So, Jen, if I'm looking to trade the gap theory, there's some things that I really look for. Yeah, and that would be a very quick trade, Jonathan, for sure. And I don't mind because we're just talking, right? So let's just talk. When I personally, in my own trading plan, am willing to take a shot at the gap theory, I'm going to show you what it looks like. Yeah, Jonathan, even I'm hesitant to take a trade like that. It's just so low success rate with these large triggers up here. It's not worth risking my money on. You guys are more than welcome to, but it's not. That's not my trade. All right, so Jen, here's our gap theory, right? Here's a lesson for you guys wondering. Let me turn this into a picture real quick. Things that have to happen for me to even consider. It has to be a bad top. I have to have fibs on all charts where it hits. And then if this were my small chart over here, that's it right there, Jen. That's when I'm willing to take a shot. I will get a second higher divergence and I will try to close that gap from a fib. Jonathan, is that outstanding or what? Guys, feel free to go, ooh, ah, gap theory. Sure am glad we didn't take a short. I'm telling you guys, happens every day. Watch this. There's the gap theory, just came true, live in front of everybody. There's the gap theory, did it again. Pretty much a gap theory. Holy gap theory. Egads the gap theory. Everything we do, ladies and gentlemen, I can't stress this enough. Everything that we do is patterns. It's patterns that repeat themselves every freaking day. Learn the patterns. Once you learn the patterns, you'll find the trades. Once you learn the patterns, you'll find the trades. All right, Miss Cindy, what's your definition of a good top? Just curious. I don't want to give you like homework typing in the room. Can I give you mine? And then you can just decide whether or not ours line up. So, and I'm going to drop this. This is a little something that I wrote for you guys. Strong tops and bottoms for the new user. Good tops and bottoms for the new user. So when we're learning termination conditions, the recipe has always been the same, guys. Price reaches an area, and if the trigger lines are above support, below resistance, it's an area that may be likely to stop the market. Is everybody comfortable with termination conditions? Price reaches the area. It has to reach the area. If it doesn't reach the area, it's not a termination condition. Are you cool with that, everybody? Miss Cindy, does that make sense? Because we're going to tie it back into your chart. So what we do is when price reaches the area, it becomes a termination condition. And if those triggers stay below, it's an even stronger termination condition. But it's not a strong top or bottom until it reverses the market, until the large triggers roll, the smalls are on the other side. This reversal turns this termination condition into a strong top. This is just a termination condition. It's 4 bars later that it becomes a strong top. So when we look at yours, and I just want you to see this, this is nothing more than a pivot from the middle of nowhere. We used to call these pivots from space. And if it doesn't come from an area, it's not a strong top. I'm going to get this. Here we go. If it doesn't come from an area, it's not a strong top. And what that means to me is that there were no decisions made at key areas. There were no decisions made at major numbers. What a bad top means in a lot of instances is that 50-50s are less likely to work. Because very often from a bad top, we get to that mid band, we get to support, and a lot of times the people that were pushing up that didn't reach their fib try to reach their fib. So much so that for me to take a 50-50 trade, a strong top, a termination that reversed the market is a 100% precursor for me. It's a mandatory for me. So what happens is 1 divergence, this is your best of the best trade. 2 divergences is creating problems. A pivot stop out and the area is still not broken, and now your smalls are on the wrong side of the large and things are going wrong. This is not fear of missing out. Cindy, this is you watching a market not break through the area from a bad top. Does that make sense? I can get on board with the first entry. The first entry is the best entry right here if you're going to take it. For me personally, this is an exit condition, especially on a 50-50 from a bad top. If you decide to take it again, it's on the reversal bar for me personally. And then I'm out everything but 1 at trouble, and a reversal bar pulls me out at a pivot stop out on a 50-50 multiple divergences. So I love knowing what I'm getting into, right? But I'm getting paid. I don't have a clear path. I'm getting paid at trouble. And there is no way I'm breaking even on this trade. They're gonna pay me. They're either gonna pay me or they're gonna stop me out instantly. Does that make sense? But the reason we did that is because if this were coming from the fib, it's more likely to break. And I might be a little looser with my management. So guys, there's your gap theory. And then Cindy, here it is again. Bad top, hits the mid band, closes the gap theory, and then is it just me? Or does this market appear to want to continue up? Should we play fortune teller? I bet you those buyers are looking for 53.54. This tells me that this isn't a good idea. Now I have this termination condition holding, price is above it, triggers are rolling, everything's going green. It's pretty awesome. That's probably, not definitely, but that's probably what the buyers are looking for. Does that make sense, everybody? So understanding where you're coming from creates huge expectations when you get around that mid-band support area. Not guaranteed to go up. I'm sure as hell not going short though. And it's probably too soon for a long. So I'm gonna sit and do nothing. And then Jen, this one didn't give me any opportunity to try to take that move up there. There wasn't even a divergence to help. So Cindy, I love your exit on that trade. Love your exit on that trade. What's the NASDAQ doing now? Did it bounce up from there? I'm just curious. I don't keep my NASDAQ open for class. There's no way I would go short, but it's just too soon for longs. Oh, I'm sorry, Muser. 1122? Absolutely. There it is. You caught me rambling. Thank you for saying that, guys. If I ever miss your chart, let me know. It's never on purpose. Nope. All right, so Muser, not the gap theory. Not the gap theory. Nowhere on your large chart do I see the gap theory. What would it have to be? When we hit this area, the large triggers would have to be all the way up here. When I hit this area, the large triggers would have to be all the way down here. And now that I'm hitting this area, the large triggers would have to be all the way down here. Does that make sense? But that's okay. You have a termination that reverses the market. You have a strong bottom. You're into a mid band, but the large triggers aren't a full bar away. You have momentum in a clear path, and you just got to pull back to support right inside of favorable large triggers. What's a 1-to-1 termination condition on the small chart? This is a concept I'm not familiar with. Let me see real quick. Let me check the Sunday school book real quick. So Muser, large chart termination conditions are lines on the large charts, right? We're looking for, this is a great lesson. Thank you for posting that. We're looking for fibs. We're looking for mid bands with the large triggers a full bar away. We're looking for divergence highs and lows. We're looking for 1-to-1s on the large chart, right? But large chart defines the areas. Small chart is an entry chart, Muser. And I've made this mistake 1,000 times. And this one had to be literally beaten into my head by my brother. And if you've ever seen my brother, that's a hell of a beating. He's a big guy. Entry charts are just that. They're entry charts. So what's cool, I think, is that there's only one time on a small chart, Muser, that I will say, guess what? Rule number 2 is not met. And I'm going to show you exactly what that is. That's it, man. That is the only time I will say that my rules are not met, is if 3 divergences print in the same price range. And you want to know what that 1-to-1 did for you? Let me put your picture back up. That 1-to-1, oops, I just lost it. Hold on. That 1-to-1 was just enough to give you a bounce back to support inside of triggers with odds favorable minimum and a clear path coming from a termination condition that absolutely no trigger lines broke through. That's the ES. Let's see, crude oil. What time was that? Was that yesterday? Just curious. Was that yesterday at 12:37? Man, you're going to make me work for it, huh? Is that Eastern time? Okay. I just want to see. So, right, that was it. Just for grins, I want to see what my small chart looked like. All right, 12:37 2 days ago. Let's look for that arrow or that circle. What do you think, Muser? We could have taken that one, huh? Our charts look a little different. I had to rebuild mine a couple times. But if we put them together, I had fibs, you didn't. Termination, you had a fib, completely different look. I've butchered my charts 1,000 ways to Sunday. But based on your chart, that was 100% wild horses couldn't keep me out of that trade. Does that make sense? And I think that this is a good lesson. And this is a lesson that I had to learn the hard way a lot, is don't let a line on the small chart scare you out when the large chart is perfect. This line is probably going to give you just the bounce you need to get back to support. Even one divergence, people are like, oh, a divergence, I can't take it. That divergence might be exactly what you need to get back to your area. Same thing with these small triggers rolling. That little loss of momentum is exactly what you need to get you back to that area. Great trade, dude. Great read. Perfect read, other than the gap theory. But absolutely beautiful, and you nailed it. And one conversation gives you the lesson that you need to catch it next time. The magic of the class. If price hasn't touched the midband, but the large triggers are a full bar away, is that the gap theory? It's not the gap theory because the gap theory only happens when an area is reached. Are you talking about crude oil right now, Kenny? It's easier if you show me a picture, because if you try to make me guess on what you're talking about, I can't tell you if it's okay to take a trade. It may be the most asinine scenario you've ever seen in your life, but I have absolutely no idea. Take a picture of what you're talking about. Are you talking about crude oil right now? Because I'll discuss it for sure. So let's do this. Trend is down, smalls are down, large are down. And you're saying with these weak triggers, since I haven't actually reached an area, can I try to capitalize on perhaps a little snapback momentum, something to try to get up to that midband with these weak triggers? It's aggressive. I mean, and guys, I say this all the time. You can do whatever you want. It's still not a clear path. It is weak triggers. It's double divergence. But let me show you something. These two divergence below, if everything saying down is true, whoops, and this market's going to continue down, that second divergence, I expect it to take out this pivot. And then if all this down, if everything down is going to continue down, this is a perfect place for it to happen. Does that make sense? Large chart's not even giving an indication yet, Kenny. And the fact that all my triggers are below this area is a red flag for me. Doesn't mean that it can't work, but let's see if patterns repeat themselves. And this is expectations through a chart read. Everything is down on the large chart. Large triggers got through the areas. Small triggers are down. Large triggers are down. Two divergences. There's my pivot stop out. We'll see what happens. Yeah. No, the midband. So for me, typically, like if I'm all the way out here in the middle of nowhere, Kenny, and I get this look, maybe I trade it to the midband, right? I've got everything rolled. I'm on the right side of things. Life is good. This is where the opportunities come in. Small triggers roll head that way. And that's okay. This is a great conversation. If these small triggers roll and I get a little snapback and I haven't reached the area, maybe this fib isn't there. I love it. I love everything about it. This is a horrible look for it, which I know makes it difficult on the lesson, right? But see how these rolled from the middle of nowhere? If I had gotten a little snapback right here, maybe to those triggers, all day long, Kenny, all day long to get to that midband. Then when I get to the midband, get the hell out, right? That's my trouble spot. Does that make sense? Awesome, dude. Good question. Sorry I missed that chart earlier too. Oh, that was Muser. Is this Jen? This is Jen. Jen says bad top support. This is why I never assume anymore. I love it. It closed the gap to the triggers, and now it's caught in between the two correction points. Bing, 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 bing. Is support going to hold, or are they going to go up? Hell, I don't know. But what are we sure of right now? I don't really have odds favorable momentum down, and I really don't have a clear path down. And I do have a clear path up, but I'm fighting all the stuff. And sweat it even though it's cold in the UK. And now you don't have to anymore, do you, Jen? Paul says when the mid-band holds and it closes the gap to the triggers, I don't know that it's an entry. Paul, were you catching all the lessons that we did on this? Gap theory says don't try the short. Did you catch that lesson? Is that the same picture? Okay. So when we reach the midband, as you did here, and the large triggers are a full bar away, Paul, this is a termination condition. Textbook, 100%, straight out of the manual. And I mean 100% straight out of the manual. If you reach a midband and the large triggers are a full bar away, it just says no shorts, man. It says don't go short, Paul. Don't do it. It's probably not going to work. I don't want you to hurt yourself. Don't take the short. And then when you pull up to here, you should have never taken the trade. I guess that's the answer there. Your rules weren't met. So let me answer that question. You should not put your stop at the top of the window. That's a horrible amount of risk into a termination condition. But where you put entry here, what you could say is you said, you know what? I hit the midband. Price reacted. It closed the gap. I'll take confirmation off of those large triggers to see if it decides to continue down. So avoid this one. Don't give that money away. If you're a gambling man with everything pointed down, that reversal bar is your lowest risk entry. And then that support is your get the hell out. And this support, Paul, should be showing up over here. You don't have your tick replay activated or something, so you're robbing yourself of some great areas. And look where that one stopped and started to create a bounce. So I'm not opposed to that little snippet in between the two, off of the triggers and everything down. I'm a huge fan of you never taking that opportunity there because of the gap theory. Does that make sense? So a way to maybe avoid a loss and put a little money in the bank. Great job, dude. Thank you for posting. Guys, there's a million lessons that I don't think of, but once you post a chart, it's pretty good. So weak triggers, right? Came up, and it's just still going up. This reminds us that I don't control the market. The only thing I can do is wait for a statistical advantage, wait for patterns that repeat themselves. But that sure is momentum, right? All the way up, that sure is momentum, all the way up. So Kenny, if you're a gambling man, that's your gamble with momentum, and you know where your first trouble spot is, and they absolutely blew through it. Just one more reminder that somewhere somebody has more money than you and they can make that market do whatever the hell they want. So we're better off trading patterns. We're better off trading something that can be studied and back tested and proven to win more than it loses. Jen, you might control the market. I've always been mesmerized by what a girl with an Australian accent can get anybody to do. So you might control the market. I might need to employ you for evil. And now they're just kind of fighting at fibs, guys. We've got a minute. Is there anything else you guys would like to talk about? Is there anything you want to see? Anything that I can do for you here? This is pretty much our day every day, guys. I'm going to shut down YouTube and get you guys a link.